first I was afraid. I was petrified. Kept thinking, will the Bitcoin prices make new all-time highs? I spent so many nights thinking how I should go long. But then I learned to trade alone. And now you're back to the Rocky Outcrop show. Go and check out the Bitcoin prices with me. Let's let the intros roll. Well, everybody, thank you so much for joining me. I really do appreciate it. Still a couple of little wee issues here with regards to the page. Kind of let me stretch things out properly. You can see my ticker thing up above the box, not quite the right shape. Streamlabs really does loves to give me hassle when I'm trying to set up a live stream. I don't know how everybody else does it so well. They're all handling the Streamlabs perfectly, whereas I seem to suffer at the edge of every bug. So nice to have you all with me here. Thank you so much for joining me. Nice to see you here, AB Lopez, first man in the stream. You deserve a medal. Then we have 3000 Trin. Tight. I got some time today. Nice, excellent. 3000 Trin. Good to have you here, buddy. Fantastic. Did you try turning it off and on again? Yes, I did. That was the solution in the end. Tradespawn, good to have you here. Hey gang, he says. Ventilus, hello. Good to have you back. Nice to see you again, my friend. Excellent. So good. It's always good to see somebody coming back for a live stream, having been here in the past. Great to see it. RT Pile, congrats Rocky, you've made the television and cell phone simultaneously. That's a first. Wow, the space here. Wow, I feel it. I can feel it here. It's fantastic. Hope you all liked my intro. I had the tune stuck in my head, the actual tune, and then I needed to solve the issue by making it sort of refer to Bitcoin prices or something like that. There's also other lines that I wanted to put in the tune that I was kind of thinking at the time, but I didn't say it. I like that whole spent so many nights thinking how I should go long side. I think if we put our brains together, we could probably come up with a really good parody song of I Will Survive, but we'll call it, Bitcoin all-time highs. But there's also this other feature with the Bitcoin pricing. Let me just zoom out a little bit so this circle here can look like a happy face on the charts as I kind of introduce the show. There's another feature with regards to the Bitcoin pricing that I thought I would talk about in today's video, having seen it take to the Twitter trending sphere, the world on Twitter talking about the monetary supply, and I thought, well, the monetary supply, it rhymes with all-time high. That could probably fit into that song as well, but I didn't fit it in there. I didn't fit it out, and I just rolled the intros instead. Well, it is what it is. Let's do it. I'll animate it. Yeah, totally. Can you get a livestock ticker going? That'd be sweet. What do you mean in terms of a livestock ticker? I mean, I've tried putting up this, as you can see over there, the Bitcoin US dollar. I could even take out the end because I like saying dollar rather than dollar, so Bitcoin to US dollar ticker over here. But there we go, that fits in better, Bitcoin versus US dollar. But what would you like to see on a ticker? Yes, of course, a crypto stock, of course. So what we're talking here, maybe something like the top 20 floating along the bottom or something like that. It would be cool to be able to do something like that. I'm not sure how you do it. We'll have to look into it. And see what we can figure out. I'm sure, again, if we put our heads together, we can figure something out with regards to that. Or, of course, maybe I'll figure it out on my own. I can hear a couple of bidding noises in the background, and I can only assume that's coming from the wonderful world of Discordia. So let me just stick the old Discord up there and remind people that there is, of course, a Discord community which you're all more than welcome to join, and people are chatting away in here, of course, as ever. And if they want to come and join us in the stream, then they're more than welcome to. No fingers being pointed. For instance, yourself, Spidey Monkey, you'll probably turn up here at some point. Everybody's welcome in there. And as well, I am thinking that at some point in the future I'll use the voice chat section here. As you can see, I've just gone live into the voice chat on Discord. If somebody else were to join that right now, for instance, then they could be on the show as a guest. How cool would that be if any of you want to do it? Or of course we could kind of schedule it out and have live phone-ins. Maybe I could even do a Q&A thing sometime or something like that, or whatever, running it through the Discord with the voice chat. Anyway, better Discord disconnect from that so I can keep all my bandwidth going for the sexy stream over here. In fact, I'll close that so I don't get any more notifications coming up on stream. And what are we going to talk about today in today's live show? Well, actually, I think I'm going to take it quite easy today. I'm going to take it quite easy. We went into extreme detail with the price action and the technical analysis in yesterday's show. So a lot of that really has actually been covered, but Bitcoin has continued to go a little bit higher. What we talked about, one of the things we talked about in yesterday's show was coming up and forming a potential double top type idea there, you know, potentially if we were to simply go back up. Now, I wasn't predicting a double top at all. Let me actually just get rid of the VWAP. We don't need the VWAP on there uglifying the charts for us as we chat. I wasn't predicting a double top. I was simply saying that if this were to be a formation of one type or another, then we could be going back up towards that 27,800 region or so, 27.7, whatever it was I happened to say yesterday. And of course, we ultimately did that. And that was addressing the risk of this just, you know, essentially being one form or another of a sort of bull flag, because we didn't have the classic bull flag structure really necessarily in there, but there's a couple other things that could see that it's coming up towards this zone, and of course that was then a risk area to be aware of, and we pushed on subsequently since, as you can see, looking at these 4-hour candles here on the go. So that was decent in a sense that people were able to kind of take trades from the 26,000 area up towards the 26,500 area up towards the 27,500 area for argument's sake there, and that was good. A couple of things have changed in terms of the chart, so I can talk about this in terms of the delta for us, I suppose, you know, the difference really, to kind of score a few things off the list. First off, how about we can kind of form a couple of like a little check a box here, a list of things. So we could talk about the volume, which has changed since yesterday. We could talk about the divergences, have they changed since yesterday? We could talk about the DMI position, you know, has it changed exactly since yesterday? For instance, there's a few things that we can talk about, which we will of course talk about just now. And I'll just start off here then by doing such with the volume. And as you can see here, the moving average on it is sloping towards the downside while the prices are going towards the top side. That's not ideal, just, you know, it's not ideal to have. And what we're talking about here again is risk. But there's this unspoken thing which I don't think really needs to be spoken too much, which is hence why it's unspoken, remains tacit, if you like. The tacit rule, if you like, because it remains unspoken, but I'm going to break that now. So instead, let's just call it golden rule instead, because it's going to be spoken. Tacit, by the way, means essentially unspoken, and the golden rule is in a bull trend, things are bullish till they ain't. Right, here's the other flip side of that. In a bear trend, and it's the same thing. So what is that? You know, what do I mean by that, and what has to be said about that? Well, things are bullish till the end. So I often talk about all of the bullish or the bearish sort of aspects of the charts here, whilst we're in a distinct and strong bull market, as we have been for the last 9 months, you know. And if we were in a distinctly bear market, then maybe the expectation amongst the audience would be that I would be talking about when things could turn around, when are we going to get our bottom, etc., etc. And that is the way that things kind of go, really, you know, with regards to trading in general. That most people in the market want to be long and trade things towards the top side. So in a bear market, they want to be long. Now that doesn't actually change when you get to a bull market. They still want to be long, and well, that presents a couple of problems, because the attitude that people have when it comes to looking for opportunities for the market to reverse, etc., in a bear market, I need to be somehow addressed in the way that I'm doing just now. So I hope that that's clear with everybody and what we're doing here. Now, I'm not saying to people that that they should just go long at any moment from where we are, you know, when they tune into the video. I have a very simple rule when it comes to buying or selling anything in markets when you're trading, and that there is always time for technical analysis. And I know sometimes it doesn't feel like that, it really doesn't, But the truth is, there actually is always time for technical analysis, which is why I demonstrate this in what could be almost described as a sort of laissez-faire attitude, or when it comes to charting, but actually it's just me demonstrating a lack of FOMO and what that actually looks like, and what it looks like, tastes like, smells like, so that you can know if you're acting the same way as well. I really am honoured, by the way, to be on 3000's Trin's telephone and TV at the same time. I do feel like this is, of course, a seminal moment for the show, and everybody should be really proud of themselves, because of course, as a community, we're also getting our chat up there on his TV right now as well. As we can see, as I look in there, there's some bits that I've missed already, you know, from people such as the comment from Zoner that says, "Thanks, mate. I hope Santa was generous to you, Tradespawn, and Rocky Outcrop." How lovely is that? Santa was generous. What Santa did for me was brought me 2,000 subscribers on the channel, and of course that means that there's a community out there of 2,000 Rocky Outcropticians. You add me onto the top, then that was 2001, and that was the best Christmas present that I could have asked for. So cheers, Santa. Much love, my big fat red furry friend. Anyway, let's just take a look then at the charts here, and as you can see in the 4 hour time frame, we've just been moving towards the top side. We have got a high in here, which is followed by potentially another high, which has this higher low in between times. We can talk about those divergences and say, well, you know, in yesterday's show, where were we in terms of the price action with regards to yesterday's show? Where were we? It was today is the 30th of December. Yesterday was the 29th, and I streamed it around about this sort of a time here, and we were looking and saying, well, if we came up and put in highs, there's a good chance of that being divergent. That's absolutely the case. If you wanted to burn that off the way, then you would need to go way up past the 28,800 area, which is of course where we have gone to, and then have we burnt that divergence off? Well, not quite. It didn't do my maths, you know, 100% properly, I suppose, with regards to that one, or I didn't take into account this little drop that we would have in between times. And what we see is, of course, that the RSI is putting in yet another bearishly divergent top, and I think this is probably something to be bearing in mind over the next wee while. Can we push past that area? If we can, then that's great. Then we can go on and try the 30,000 area, and that's the next sort of obvious target now that we're at a stage where that is obviously well within a 10% move from the current prices, and 30,000 is the next round number. Do you need to be any overly complicated with your technical analysis than that? Not necessarily, but there are other areas that we could look to, such as Fibonacci extensions and the like, to try and find targets towards the top side. In a market where you're in all-time highs, you can't rely on historical price action, looking over to the left and finding areas where the prices obviously bounced around a wee bitty, and as we can know, we're obviously in the process of putting in yet more all-time highs here. If I just jump up towards the 24-hour time frame to make it even clearer, you know, this is all empty of historical price action. There's nothing over here. We're just in all-time high territory. So, you know, obviously you're going to have to find a couple of ways of doing that, and one of the ways of doing it as well is obviously like we did yesterday, where we talked about certain patterns and with regards to the price action. Did we intimate that there was a chance that this could be a symmetrical triangle? I'd say I probably did, although I can't remember off the top of my head if I said specifically that this is what we'd be looking at. But here we are, right here, having come up and achieved the target off the back of that. So, you know, there we go. Not particularly massively exciting. So what else are we going to talk about? Oh my god, what have we just seen here? Look at this. Look at this. Just wanted to say thanks for your work. Have a few beers and a nice meal on us. One, Artie, thank you so much. That's very generous of you and very kind. I really do massively appreciate it. Actually, tell you what, it makes me a little bit emotional that somebody is being so generous, so thank you so much. Yeah. But the second thing is that look, everybody, at what Artie said there. He said, have a few beers and a few meals on us. He's donated that on behalf of the entire community. Wow, that really blows me away. I didn't really think that this would be possible, that this sort of thing would happen. Now, obviously, I can make that trade in, and that's fine and everything else. But to get that as a thing, yeah, I'm totally blown away by that. Thanks very much. That's so generous. Anyway, cool. Let's crack on with the charting. I'm sorry, I didn't expect that. Fucking hell. That's really embarrassing. I can't pause the stream, it's live. What are you going to do? Right. Fucking hell. Cool. So we've come up towards this top side, and as a result of this recent movement up in the price action, we can see the ADX has taken on this blue stance. It's moving towards the top side. That's very, very good. And we're looking at a point here right at this 30 line where you want to see things moving above this so that they can continue continue to develop that strength towards the top side. Now we are aware of the fact that this most recent high has come in with divergence, and of course this current one that we're going right now, any pullbacks from this price then obviously stacks that divergence up the way. So we need to be aware of two real key areas with regards to how this moves, and we have it laid out there fairly easily with that 20 line. Either any of these lines approaching 20 would give us cause for concern, but we have had this cause for concern in the past, obviously during this bull market, and it hasn't really evolved into anything. What we can see here is it was just chop during a bull market, so that's really just what to look out for if we see a degree of sideways. And then that means that every given time along the way, what we want to be doing is looking back towards the previous lows that we've had, and that gives us that historical significance in terms of areas. And if we do break them, then that is, that's what to look to, because if we go back down the way, it's very, very rare in this bull market that we've taken out of the previous lows in terms of where we've moved in price action on the 4-hour time frame even, and like it's obviously almost non-existent on the 24-hour time frame and such, but here on the 4-hour time frame, it just doesn't, like where it'd be easier for it to happen, because it wouldn't necessarily form as a low on the daily time frame. You'd just be looking at a wick, and by that stage what you see is it's not happened on the 4-hour time frame either. So we can see that there's this area that we come in with the previous couple of lows in there at 26,500, and I think that really does stand out as being the most obvious area to look to at the minute if we're going to see a retracement. So what we'll do here is we'll stick on a horizontal line, and we'll just see how this lines up purely for speculative purposes, for educational purposes, we'll call it, or for entertainment purposes, even better, right? We'll call it that, and say, where does this line up in terms of a Fibonacci retracement with regards to 236. Now you can see this isn't a great distance between these 2 points here on the 21st of December, and of course up here towards the 30th of December, coming in for our New Year's Eve sort of opening candles, or whatever, coming in for New Year's Eve. Isn't a great deal of distance there between them. So whenever I draw this in, you can see the crosshair, by the way, with the horizontal line. It would be this is where I'm taking it from, just here, but I'm drawing it over to the right so it doesn't cause too much clutter. He said face palm, and then I remember that I've extended the lines left and right anyway, so of course it caused that clutter in the end. As you can see, that would be taking out the 236 over there. It doesn't line up exactly with it, but it gives you a little zone where obviously we'd want to see the prices turn around here. If they wick down to this area, no big deal, but closures below this area mean that we've certainly taken out the 236, and you're lining up with the 382. But is that like the most significant Fibonacci area to be looking to in this whole period, really looking back the way? And I got to wonder, I'm going to just remove this one, I got to wonder if that's really necessarily fair. I think in such a long upward movement, that if we were to be looking for a change in terms of the trend, then we really should take into account the at least the majority of the trend. And as we can see, the 236 lines up with the previous area down there at 22,000, and that's of significant, the majority of it, that's like these significant areas. Here's another significant area we can see as well, and that's in between those 2 points, with the 382 lining up with that previous inflection point. But really just going to drag this back down the way towards the lows over there in March, so that we can get a handle on the full distance, really, because this will spread things out quite a bit for us and make it a little bit more sort of digestible in terms of where we would need to see movements go to really be to actually start to cause some concern for us. And this is still a 4-hour time frame, but this is going to lead us in nicely talking about it on the 24-hour time frame, and really we can actually stay bullish on the markets, really, in terms of where the next move would go. And by that, what I mean is, would we be able to see things like 30, 35, 40,000, etc.? Is that in the cards for us? Is that still a possibility? And it remains a possibility, to be frank, as long as we're staying above, in terms of a closing basis, 18,102. As you can see here, that's the last two significant low areas. And if I jump up towards the 24-hour time frame and move that out of the way, for us, then you can see again this is just kind of flux along the way, and really the last low that we have comes in here at 18,220, and that's where we need to look to in order to kind of say, have we taken out anything of real significance? Now of course there's genuine trading moves to be had here, and it depends on what sort of perspective you're taking to the markets. And me personally, I would be more than happy to short against a move, short a move down there and take advantage of that myself. But of course that's not to everybody's tasting, like we kind of opened up talking about with regards to those movements. But with regards to the attitude that the general market has with wanting to be long on things really in general. So that's what that would be happy enough to be doing that, and we can see that the first sort of step towards doing that of course would be taking out 26,500, and we'll be looking at a series of potential 10% moves or 10 to 15% moves here in the price, where you'd be able to take profit along the way and stay relatively adaptable and flexible with regards to whether or not the prices could then turn around more or less any time along the way. And by what do I mean by kind of more or less any time along the way? Well, if we were looking down towards that 236, the most significant area in between times is of course this area where this low was in there at 16,300, and along the way we see various targets where the prices could turn around at. And for instance, the 382 lining up with this last inflection point, the 236 just beyond the one that we experienced in the last sort of 24-48 hours, and then the 618 coming in at the highs here on the 2nd of December, just as we were breaking those all-time highs yet again as well on that one. So that's like a couple of areas to be looking to, but really as well, what do we have in terms of, well, that's that's the Fibonacci style discussion kind of done. But with regards to the movements towards the downside, there's a couple of areas where you could take, you could use in terms of forming extensions towards the top side, and this is kind of another debatable point. And let's just put this back into the context of what I was talking about here in the run up, talking about how if we're going to be talking about trend changing moves, etc., here's the entire trend with the Fibonacci against it going over the period of the last 9 months back from March there. So what we've done in recent times when we've been talking about extensions towards the top side is taking it in from the highs that we had in February down towards the lows in March and moving against that move. And of course, we've taken out all the major targets with regards to that one. Let me just show you. And I did say in yesterday's video that of course when you're talking about Fibonacci's, it's always important if you're going to say the word "the" in advance of saying Fibonacci retracement or Fibonacci point or whatever else, that you explain the context of it. And I'm trying to deliver that context here as we chat. But you can see that I've got a few a couple of extensions on here, the 1272, 1414 and the 1618. They're all taken out a long time ago with regards to these price movements, and we got these price targets coming in there at our all-time highs areas of the 20,000, etc., etc. So you can kind of feel like that's a degree stale on that one. And if I stick on the extra targets, like for instance the 2618, then as well, that's quite a distance away, and that takes you all the way up towards $50,000 on that one. So and that's just the distance between, if I take away all of these different numbers here, so there's no confusion in what I'm talking about just now. I want to make a broad point here, and I don't want it to be super confusing or too much overlap on the go with what we're talking about here. Let me just actually hide this other Fibonacci as well off there. It doesn't need to be on. So in terms of the Fibonacci extensions between this point here, I suppose I better keep the 1 on so you can see where it's drawn in from, and we'll make the 1 red, right, and we'll make the 0 green, so you can see this is Fibonacci here drawn in nice and clearly. So you got this let me get rid of the 618 as well. We don't whoopsie, where are you at? Hide that one. Well, that is the one that I'm looking at. Where's this? Oh, there it is, down the bottom. Right, so there you go. There's your start and end point for the for this Fibonacci retracement. The 1618 coming in there, and the 2618 coming in all the way up there at $50,000. So that's quite a stretch away. Now there are other Fibonacci extensions, and we've covered them in the recent past, and it's totally valid to be using one from over here in this area like we did in the past. It's also you could use one in this area just here on the sort of 20th of December. And the in that inflection that we had on the run up towards Christmas Day and Boxing Day before going on up the way as well. But I'm trying to draw a broader point here, saying, well, if it's valid to be talking about the entire trend here in terms of your Fibonacci retracement towards the downside, maybe it's also valid instead to be talking about the entire trend here, rather than from the this short-lived move in February, but actually the entire downtrend of the 2019s instead, right? And see where that lines up. And what we can see here at this point, graciously, the Fibonacci retracements here have lent themselves to me making the point. Obviously, like, by the way, when I'm doing this, it's always ad-libbed. It's never researched in advance. Sorry, and maybe I should do that, but only so many hours in the day, etc. And these days, whether it being Christmas time, I've been spending less time looking at the charts during the day than I otherwise would be, and it's fun to do this together. And as well, I have a broader perspective when I come to trading and everything else as well. So I don't need to be staring at it in terms of the 15-minute time frame. And if I do stare at the 15-minute time frame, it certainly doesn't lend any sort of it doesn't lead me down a path that I need to extract that information out and remember it for later to put on the show or any of that sort of stuff. So it's all good to do this live, completely fresh and everything else, but there's always a little worry at the back of my head that what I'm looking at on the screen isn't actually going to line up properly when I come to do it. And then it's obviously a big relief when I see that it has done. And of course, then what do we see is that the 1618 at this point, which would be a classic turnaround area for us, comes in there at 29,557. Hey, by the way, Damo, good to have you here. Good to have everybody here as well. It's really nice to see the likes of Michael John Scott joining us, as well as Navanethan and all the rest of it in there. That's fantastic. By the way, actually, I'll just let this whole chat about the 1618 kind of sink in there on screen in terms of just in terms of the significance of the area that we're coming up to right now, and the massive girthy difference between the other Fibonacci extension areas. Now, the 2618 on this, which you will be curious about since I just mentioned it, takes you all the way up to 100 grand, right? That's how far away that one is, just so you know. And that's, of course, maximum bullish territory. Don't come knocking on my door if the prices don't make it to 100 grand, because I'm not just after saying that that's where the next price target is. That's not what I said. That wasn't what I said. That's where the 2618 happens to be at, though, just out of curiosity. I can take that off there for now and instead show you a couple other little things. There is the 1272. So this is another significant area for them. Now, a lot of people like to look at the 1414, and that's on there, and we can take it. We can look at that one next. But let's just draw in where we saw significant areas of price action in the past, where we then had a big retracement from them. Now, I'm not saying that the trend's going to turn around at the time that you hit this here, but I am saying that, of course, there is a significant chance. Get away from me, you hide that at least. Where is it? Remove. Yeah, good, right, that's better. And at this point here, of course, we saw a 15 to 20%, depending on how you want to look at it, retracement in prices, and all that at that time. Okay, so then where's the next area for us in terms of this Fibonacci retracement? Just to put everything into context, I want to have everybody have a nice broad perspective, and I know the chances of this thing being discussed in this manner out there on YouTube is probably fairly limited, and as well, it's educational resources, and it's following on from the in-depth, really detailed TA that we did yesterday. Just kind of carries you through the week. Always learning something, looking at something new, and having a fresh perspective on things, and that's basically the idea that we're doing right here. So I stick on the 1414 here, and the other significant area that people look to. We see a difference with how the price action responded around this zone. Okay, so we came up and we cracked through it. We actually did have little inflection points in and around here, and I could crack down the time frames and show you on the 4 hours how we were like thinking which way are we going. But ultimately, you can see we broke past it, then used it as support in a sense, and then move towards the top side thereafter. Okay, so what does that really mean? Well, what it means in terms of what we're looking at for us right now with regards to this price action is that if the prices come up towards this 29,590 area, don't actually hit 30,000, then retrace away from them, you're going to see the feeling of, oh my goodness, we were so close to 30,000, now we're quite far away from it. We were within spitting distance of it, like, only had to go an extra percent, 2%, whatever, and we'd be past it. But now we've moved down and we're about 10% away from it, and that that context that puts around a real psychological level is a real thing. Okay, it is a real thing in markets, and this is an example in advance of how that could happen. Now, again, as well, there's the other idea where you go past the 30,000 thing and you say, hey, look, this is obviously a significant area. We found it as support in terms of the Fibonacci retracement points if we're looking up towards the next zone to be going to. And in all honesty, There's various other ones that you could put on there as well. You don't have to go directly towards the 2618 there, you know, or whatever. You could put on the 2.272, for example. I'm going to have to write this in myself though, because it doesn't seem like it's an out of the box one. So let's just do this. You know, you could put on the 2.272 as an example or whatever, and see where you'd be at on the way next. And it comes in at 65 grand. You know, it's almost pointless at this stage. But the feeling of enthusiasm in the markets, and having not only gone past 20,000 but then gone a 50% beyond our all-time highs previously, would be, you know, quite significant, in the same way that moving just a couple of grand shy of 30,000, having been so close to it, would also be significant. And where do we find ourselves now? Well, we find ourselves at $28,950. We are, in fact, you know, in terms of percentage moves, only 2% away from that 30,000 area. Well, at 29,500, you know, where the 1618 is, right? Okay, so we are, in terms of getting up towards 30,000, right? We're 3.82% away from it, whatever. But in terms of the taking out this area, in terms of Fibonacci, blah blah blah, we're just 2% away from it. And there's a significant area in here in terms of the psychology in the markets, right? And of course as well in terms of the trickle down effect that psychology has when you're reading an article written by somebody who has their own feelings, and they're not, you know, putting their own feelings front and center about when they're talking about things, and that, you know, they're talking about it seemingly objectively when actually they've got their own bias and all that integrated into it. Now, I'm able to say this because I proactively take steps to avoid putting that into my episodes, and I know that the sort of the burden that it takes to be able to have to extricate your own opinions from the market at any given time when you're given objective, identifiably, demonstrably objective information to people about the charts. So I mean, I know the burden there, and when other people aren't doing it or whatever, then I'm aware of it, and then I think, hey, hold on a second. So anyway, so yeah, so that's what we're kind of looking to at the minute, right? So that's the broad terms perspective stuff. Kind of went out. I kind of I suppose got a little bit distracted there with all of the chat about all of this. I mean, maybe I didn't intend on spending so much time doing it. I'm not sure how long into the stream I actually am at the minute, but let's then just actually go down the way. That's the 24-hour time frame. You know, we've got other things to look at as well, weekly time frame stuff, you know, very much bullish here. The volume continues to go towards the top side. We did talk about the volume here on the 24-hour time frame. On the 4-hour time frame, sorry, sinking down the way. On the 24-hour time frame, it's still going up. We're not seeing a big move in volume. You know, it's not, this has obviously been diminishing throughout this entire period towards the top side, and in fact as well, it's really been diminishing all the time ever since we came in and put in these sort of post all-time high candles where we kind of really pushed back up the way in terms of these dips being built up or whatever. There was a good degree of resistance happening in here. Now actually really what this was in terms of volume was a good degree of stop hunting, right? The reason why this candle here in particular is so large because so many people went long right here, right at the very top, and bought the top, and then of course somebody stop hunted them out. What is that? That's providing liquidity towards bigger accounts. Then of course they took all this candle for themselves. It provided a massive amount of volume within the structure of this one candle. Look at the subsequent candles. How much volume did it take to push this back up the way? Well, if I were to just take three little drawings, three little piggies here, and I can't be bothered. You can see it yourself on your screens, especially Artipile, who has me on the big TV at the minute. This volume these three volume candles afterwards, all three of them don't even add up to the height of this one. That's clear sign, you know, looking back the way, that was obviously a stop hunt looking for liquidity, because the person who did all of this then only had to push the price up by less than what they spent to capture this, to do the stop hunting. It cost them less to get that, to accumulate that, than it cost to push the price into profit. So if you had twice the amount of money that it took to cause this event to happen, and you wanted to single-handedly construct this in the markets, then you were able to do that side of it, get a lot of liquidity, then push the markets towards the top side, and of course then over the period of next we will take profits, whatever else, and be sitting pretty and looking at this and saying, well, we're now still above the average price at which I paid during this day for the liquidity as everybody went long at the tops of the markets, even here, and we've got support and moved on up the way, giving you that nice big JP Morgan fat stack trade there sort of idea on it. And that's how, of course, these things are operated in terms of, you know, big markets, and that's the way that institutions like the likes of JP Morgan operate within the silver markets, etc., or indeed, you know, That's all good, right? So you get it, you understand, right? And that's what we're looking at. So let's then continue to go on down the way. We've the divergences, etc. We've kind of covered that already, but I did say that we'd be burning off this is 24-hour time frame. We'd be burning off that that divergence, the bearish divergence that we're seeing within this section. If we go up to where we are now, we've done that. What do we see here overall as we come right up in terms of RSI and hit this red line? That I'm not 100% sure why it's exactly right there, but there you go. That's what we've hit, and we've burnt off that divergence. So we've done exactly, you know, what we said we could do in the 24-hour time frame. And as you can see here as well, this is kind of getting its second wind. Now there is a sort of the idea here that you've got this sort of triangle type shape on the DMI. Obviously at this point here, that's not exactly an appropriate sort of thing to do, so I'm not going to espouse that as a good way of doing technical analysis. But it is true to say that if you were in here consolidating in some form or another in terms of the momentum in the markets and the strength in the markets are kind of consolidated at an area of support, then it does lead to you to be able to say that perhaps we could push on up the way thereafter and undo this 1, 2, and 3 instances of bearish divergence that we have on this chart right here on the 24-hour time frame, and that would be the next move. And of course, all of that happening with us going up and actually successfully taking out this 1618 area, not necessarily 30,000. Will we be right at 30,000 for that that whole psychological chat that we had earlier on? It would put us right in here in this area, all nicey with the potential for going on up the way, and of course, you know, pushing on up with the red zone in mind, you know, to go up there and really blow our tops off, you know, if we really wanted to. Anyway, all of that's extremely bullish sounding, and I want to then at the end of that little bit of chat draw our eyes back to the chat that we had before, which is of course that this area here at 26,395, taking that out is very significant, and you could easily look down towards other areas such as 22,900 again, where we were previously. And then on the way down the way, the 4-hour time frame, we can see that there's a couple of things to be aware of. This is on logarithmic. Let me take it off log just for a second. In fact, let me just leave it on log because this is just more convenient, and point out that we have this kind of upward sloping area just here and this upward sloping area just here. So you have yet another potentially, in inverted commas, bearish pattern. How we've seen bearish patterns play out throughout this entire time of so far, of course, is actually just playing out bullishly. So that's fine if this wants to go ahead and do it, and that takes you right on up towards these other targets such as 31,300, and everything I kind of said so far is fairly moot. But if we do come outside of this zone towards the downside and we were looking for that support, then yet again we see that this measured move lines up nicely with that 26,500 area, if you want to be kind of broad strokes about things, right? And that lines up fairly nicely again in terms of the analysis really overall as we look at the bearish divergence here, and we say that if we don't come up towards this target and really push on to this area just here and at least go in for a nice fake out area, I'm not going to write with that, at least a nice fake out area up here, and you know, coming back down and perhaps retesting the wedge sort of structure and then continue to find support and move towards the top side, then what we'd have is bearish divergence here. If we are able to do it, then the chances of us being able to burn that off in around that point are of course fairly real. All right, okay, then looking on down the way even further, the 1-hour time frame, what we're looking at here is as well as sort of the potential for, you know, distinct bearish divergence. Over the period of the last 24 hours, what we did get was this move up the way towards that 28,500 area like we spoke about, and then that burnt off the divergence on the MACD as well on the 1-hour time frame. So we have you know, it remains in place. If I just remove that for you to see and bring this full screen, it remains very much in place on the RSI, but we are seeing of course that it is burnt off on the MACD at that point, and this is not a local high as yet, so you can't call that divergence as yet with regards to this, you know, subsequent lower, much distinctly lower move up the way. But if we do get a pullback down towards these areas, then maybe this gets confirmed as a local high, then it gets confirmed as being bearishly divergent on both the RSI and the MACD at this distinct point just here. Obviously the RSI is divergent across that and the previous high, and then the chances of you getting this measured move then become really quite distinct and real. Okay, so that would help keep you in profit, right? That's the title of today's episode. That's my mission for today, is to try and keep people in profit. Also, I actually started off introducing what I'll be talking about in today's episode, and I said that I was going to take it easier and chat a bit more. Artie went ahead and kind of destroyed my mind there with his donation to the channel. So yeah, fantastic. But I was going to go on and say that what we want to look at is the delta, and in fact Ethereum, Chainlink and Tezos have done almost nothing to change that. So we've made it to the point where I can actually check in with the wee chit chat here and see how everybody's getting along, and all that good stuff. And then as well I can and then I'll see how you're all doing, read in with all the chat. It'd be really lovely to catch up with you all. I'm looking forward to doing that like a lot. And then I'll go on and take a look at Ethereum, Chainlink and Tezos there afterwards. By the way, once again, have to say, AB Lopez, you're doing a fantastic job. Little summary for people, I suppose, is like a broad look at at the longer term trend with regards to Fibonacci, and looking at the extensions towards the top side by looking at the entire downward trend of 2019 with its extension targets, and then the downside targets with regards to this entire trend since March, the entire 2020 upward trend, essentially, if you like, really, more or less, right? That's what that was. It was a broad thing, but it zooms right down to the micro when I talk about the next target, which is actually within spitting distance of where we are, with a less than 5% move needed to take out $30,000, and a less than 3% or a 2% move to take out the Fibonacci, the 1618 Fibonacci point, and that particular Fibonacci 1618 is of course versus the entire 2019 downward trend, finishing up with those March 2020 lows. That's your summary in terms of what we covered in today's price action. And there's plenty of other people out there that'll give you a million different things to look at. But if you wanted to have one small term idea in mind, then there's a potential that we're in a rising wedge right now, with the potential for that to drop down towards 26,500. You know, and if it doesn't, then and goes towards the top side, there's a pretty strong potential for it to go all the way as high as 31,150. Is that what we called it roughly there? 31,000, right? 31,000. Although we could ultimately end up faking out from this thing. Yeah, 31,150 we'll call it. Although we could end up faking out from this thing, and I said that would be fine, because what we've been talking about in terms of everything leading up to that point was of course in here at that 1618 Fibonacci, and the general psychological importance of that combined with 30,000 and what it means to get there and how the prices respond when they're at that area, right? Therefore keeping you all in profit. That was the idea. I'm just going to chat with the chat. I'll stick this on the 15-minute time frame, pop this on here. We do like to do this on the channel, by the way. Let me just bring this down a bit. There's another couple of charts out there, like the link one and stuff like that, where we've got different things on the go. I like to do this on the channel, if you're just joining us, by the way, for the first time here today, where at the minute anyway we've been liking it, where I stick something like this on and we can come back and check on it. Apologies as well about the alarms if you're just joining us. If you're not, you know all about them. They're the sexy police. They try and hunt me down every day, every night. They just can't find me. I'm too damn sexy to be caught. Anyway, we like to have this on the show. Is it possible that we go down towards 27,851, you know, during this show and find support there? Yeah, is this a little bit kind of sickeningly optimistic in terms of its structure? Yes, it is. It's only got like the 1-2 touches. It's got 2 touches at the bottom. It's a little bit, this doesn't make much sense, let me be perfectly honest with you, in terms of this 15-minute time frame, but it's a general idea that we're kind of stringing together here. Whew. Excellent, nice one. I'm going to scroll back up all the way back up as far as I see Artie Pyle doing that. By the way, I just want to reiterate this. Just wanted to say thanks for your work. Have a few beers and a nice meal on us. That was Artie Pyle, of course. Artie Pyle being so ridiculously generous to do that, and I really do appreciate it. And yeah, it's great. You know, like that's great. Really do appreciate it. But he's donating it as well, partly on behalf of the community, and I just think that speaks volumes to the atmosphere that we have here as Outcropticians. Okay, cool. So anyway, nice one. Also got a long burning hole in same pocket, says Tradespot, and then he says fracking hell. We get a nice round of applause from AP Lopez. Attaboy RT. Fat Stack says 3,000 Trin. Wow, says Tradespot. Navanethan says so sweet RT. What a guy. Look at all these comments. Oh, Rocky, such a cutie pie. Best TA, biggest heart on top. That's really nice of you to say. Thank you, Rocky. Thanks from all of us. You see what I'm saying there? You understand what most of us desire to learn. It's a token of our appreciation. Well, there you go. Thank you so much. Is Rocky shedding some tears? Oh, buddy, good work. Michael John Scott says, anyone else running an Ethereum validator node? Got mine set up and start validating New Year's Eve. Wow, that's cool. It's actually really cool to do that. I can speak from personal experience here in terms of starting something at New Year's Eve or New Year's Day, because of course I started the channel on the 1st of January, and it makes life a hell of a lot easier in terms of looking back and saying how have things gone in general since this time. Well, you always remember the date, right? The 1st of January, and for you the 31st of December. You know, you're always going to be, you'll be able to check, you know, just how well you've done from a specific date, and you'll never forget it. It's super handy, that. Of course, it's nothing majorly significant, and you shouldn't delay doing anything just because you're looking for a nice date to do something on. But yeah, I just think it's cool. I'll occasionally post an update on profits, assuming everything runs smooth, and like, there we go, you know, and it'll always be easy for all of us to know exactly how long he's been running that for, because we can just Google what day of the year is it. Thanks, Tradespawn, I appreciate that. I don't do it for any recognition, just as appreciation, but I do appreciate the recognition. Artie, you're a legend. Really do appreciate it. And not only, by the way, did Artie Pyle do that donation, but he's also a member here on the channel, you know, which you can find links to in the description if you want to get that wee icon next to your name. I've also set up Patreon, by the way, recently. Patreon's better than YouTube because in terms of donations and whatever, because they take a smaller cut. That's all good. I mean, the smallest cut is when you do crypto donations, but whatever. I'm just, it's, you know, that's besides the point. Just telling people so that they know. Demo, hey peeps, yeah, nice to see you there. Sean Kennedy wanted to drop by and say that I got that double bottom on Link USD $7 link 2 days after we talked about it. Sean Kennedy, you if I had a hat on, I'd take it off to you. That's what I can say about that one. Fantastic. That is really, you know, that's fantastic. And obviously you've benefited from that since then. We're looking at you being up a decent chunk. At times in the last wee while you've been up 100%, because we did make it as high as $14, but then we pulled back, and you're up what, 50, 60, something like that, whatever it is, 50% currently, we'll call it, just for argument's sake. Yeah, great. Everybody showing Artie Pyle the love. That's it. Keep it going. Rocky, call out timestamps and I'll do my thing. AB Lopez, sweet. That's amazing. Really do appreciate it. I'll do that. Obviously, we're kind of getting a system going here. It's lovely. It's organic. It's evolving off its own, all of on its own. Its quality. Prefer live, not pre-planned. More real, honest, not scripted. Your style is unique. Thank you so much for that. I really want it to be my priority here is always to be authentic. I mean, like today's episode, perhaps more than any other, I've kind of had a bit of that authenticity on the go, I suppose. I was a bit emotionally shocked by that. Navaneathan, I'm short from here, super risky, but meh, yeah, you know, well, whatever. I mean, and if you're short from here right now, well then maybe, you know, this works out and we get to see something where you at least get to put a stop loss in profit. Pretty safe to put a stop loss in the low 29s, in my opinion. Yeah, cool. It could, I mean, look at this here. Is like it would be a real fucker for you to get stopped out at 29,533, or to be stopped out at 29,300 for it to then turn around at 29,500. You know, in terms of the emotional sting that you go through kind of processing that, it's totally fine though. Just going to say this in advance, if that were to happen to you, it's totally fine though, because what you're doing is you're choosing a target in advance. You're limiting your own risk in advance. As a trader, your responsibility, first off, obviously, is to yourself, but your responsibility as a trader is to buy and sell risk, and you've identified that there's a far greater risk at that point of damage to your account with every additional dollar beyond it, that you've decided that's where you're roughly somewhere in the areas where your cutoff's going to be. That is trading, you know, and you're doing the right thing regardless of the outcome, because let's face it, anything can happen at any time in any market. That's the truth. It doesn't feel like it sometimes, you know, where you can lay out distinct parameters of what's likely, but the truth is ultimately anything can happen at any time. You know, it could go to zero right now. It could happen. You know, we've seen that things happen like with Ripple as well recently. You know, obviously not getting into too many details, but we know that anything can happen at any time, and that what you do by acting in that way is actually a long-term success strategy rather than ad hoc choosing at the time how you're going to be. So fantastic, and let that be, you know, a lesson to everybody, regardless of what you think about that particular trade or that particular setup or whatever, you know, regardless of it. Yeah. Burning a little bit of profit potentially is okay, right? Fair enough. I would say that, you know, not to be pedantic here, that that you're right, okay? You are right, and I get what you mean, and the semantics and under the what you're saying there, reading between, is totally that you're fine. Yeah, you're fine. You know, you really essentially you've been doing really well, and there is a cost to trading, and that would be one of them. That's what you're saying, and that's fine. But don't go too far down that road of burning a little bit of profits is okay, because money left on the table, or money, you know, unrealized profits are real. You have to, you know, they're real, and treat them as such, you know, and make them real, make them hard, instead of it being a sort of soft notion about things, you know. So do that, you know, or whatever. But I'm not talking to you directly. I'm just talking as a general rule, that if you go too deep into that mindset of that it's okay, that profits are somehow worth less than the money you had in your pocket to begin with. No, and it's obvious, right? $1 is $1 no matter what, whether that's profit or whether that's money your granny gave you to buy sweeties at the shop, right? Haha, word trades button. I am mindful of new people playing with small bag. Yeah, cool. Nice to see AB Lopez saying, hey Lee, have I missed Lee? Lee, are you here? Are you here, Lee? Lee, are you here? Are you here, Lee? If I missed giving you a shit, oh, there you are, Lee Chinook. Good to have you. Good morning, Rocky. Good morning, everyone in chat. Are you coming on Friday? I'll get drunk on Friday night. You get drunk on Saturday morning. You know, we'll do a round the world piss up. You can represent down under. I'll represent up over, and we'll do it together. How about it? There you go. There, Lee. Where are you? 10 p.m. in the UK, GB. He's in Australia. I'll be able to tell you that in a minute, I'm sure. I shouldn't say risk schmisk, being flippant isn't appropriate, but what I mean is you're doing it right, choosing an area for stop. Oh my god, TradeSpot said what I went on to say thereafter exactly, as well there. Hats off to you for getting that chat spot on, by the way. Nice to see everyone chatting. I'm going to skip a chunk of chat here and go on down to the bottom so I can move on to the technical analysis aspects of things as well here. But I love reading it all. Hey guys, I'm back. I had to head out, help a friend jump his car. I told him he made me miss Rocky. You made it back in time though, and thanks so much, K-Doc. It's great to see you. I hope your friend at some point wants to join in the chat as well. That'd always be good. AB Lopez, K-Doc to the rescue. Woo! Nice super chat, Artie. Yeah, K-Doc, you're right about that. It blew me sideways seeing that. You know what it is is him saying how much he appreciates me, and look at the cat. And for a long time there, I didn't know. You don't know what's and I just think it's real value. I think it's really lovely, and of course I'm going to spend that money on myself. Which I genuinely have a problem doing. I'm the type of guy who would sooner give money to charity than buy myself a new pair of shoes, you know. So I'm just that type of person, right? Anyway, but I'm gonna enjoy that. Thanks so much. Right, cool. Anyway, that's a good one. MGS, what did he say there? K-Doc, which do you prefer, K-Doc or Miss Rocky? Did you make him buy you some Tezos for that, K-Doc? Lol. Oh, great to have you here, Kevin, my friend. Nice to see you, K-King. It's always good to have you in the house. AB Lopez, that would be awesome. Cheers. I should wonder what much XTZ is breakdown cover. I wonder how much XTZ is breakdown cover. In terms of Tezos right now, I think you can probably get a pretty good deal on breakdown cover at the minute, can't you? I'm not too sure actually. I've not looked into it for a while. And when I got car insurance last time there, I just didn't get that. Or did I get it included? I got it included. Lee Chinook bought some 1-inch yesterday, doing better than my Tezos, lol. Yeah, actually as well. I was looking at 1-inch yesterday. I stuck something like $50 into it. As well, just, you know, one of these moonbag efforts, and then I didn't look at it out of shame. For shame. 24-hour time frame. Let's go on this one. Make it visible. Okay, cool. We're doing all right. Wasn't so bad. Nice one. Good decision, Rocky. Actually, see, by the way, I also almost certainly put in an order to just cover off any sort of losses. I would have got it in around about here. I think I got it at 78, something like that. I think I got it at 78. So the price is being up here at $1.12 means I'll probably just log into my account later on and just take the profit off of that. Like I always say, there's nothing to, or else I'll keep it as a long-term moon bag. When you're looking at the prices being up 46%, personally, I have no issue with taking profit on that, even though it was just a $50 punt. It was just, I just did it for, I had some kind of dust in my account, and I just put it into something to make it less dusty. You know how these things go. Glad to be here, Rocky, says Kevin. Quality demo people still claiming 1-inch tokens. Are they really? Might see more downside once they claim plus sell. Cool. Well then, of course, that would justify me taking profit on that. What would it be then? I'd turned $50 into $75. Maybe it was actually more like $54, and I probably turned it into 70. Whatever. Who cares? It's whatever. It's good. It's whatever. It's what it is, right? It's good. Obviously, I wish it was 1 million, but there you go, whatever. You don't have 1 million in dust. That's not called dust by that point. So, moving on then, let's jump on into Ethereum Bobs and see how you're getting on, my friend. So, for $748. In fact, I suppose, if in all honesty, we have done more. We've done things we've talked about. As we can see over here, looking back the way this is drawn in, by the way, this particular Fibonacci is drawn in from the lows down here on the, well, actually it's drawn in from the highs on the 18th of December down to the lows on the 23rd of December, coming in here, hitting off the 1618, staying up above the 1414. It's kind of is like what we're looking to see happen. We're talking about the potential for happening with regards to Bitcoin. The same sort of thing actually is in terms of those two highs and lows on Bitcoin. I suppose might as well just stick this into context. For us is what we're talking here, down there and there. Yeah, so just so we have the context on, is that we've come up towards the we've gone past the 272. The next one up the way is the 3. What have I got on here? The 2618. The next one up is miles away on that one. Yeah. Remove that. We don't need to, there's the context, but it's regardless. AB Lopez, right? How about we call it? How about we say from here? And I'm going to need to find a timestamp thing for me. So let me just change the layout I have on my second monitor. What we do here is 56 minutes. Fuck, it's way long into this episode already. 56 minutes, we're talking about Ethereum, right? There we go. Ethereum USD. What we've seen in the last day is that we've come up towards the 1618 and touched it at 759. That's nice to see having happened. We obviously want to see this trend continue, but for people who took profit at that point, don't feel ashamed about it. That's totally fine. You probably did the right thing overall. If you want to know where the next sort of target to be looking to in terms of this, it is up towards $845. It'd be remiss of me not to point out the fact that $800 is obviously a psychological level, and I would expect to see profit taking happening around about those levels anyway. We can actually just hide that off the chart and then bring into context from the same sort of period of time what we'd be looking at for a retracement. Well, the first signs of that happen now at this stage, having come up towards those highs in there at $708 if we were to go towards the downside. Here on the 24-hour time frame, this doesn't look like much. It's just a parabolic move towards the upper ends of things. We can put this into context in terms of a number of ways. The way I'm going to do it right now is here on the Bollinger Bands, and as you can see, we're moving nicely up the way, tracing this towards the top side. Can we expect this to continue? Sure we can. Is there a danger of a massive pullback or anything like that happening? Well, not necessarily. We're not actually we're not actually opening and closing above the Bollinger Bands or anything sort of scary like that, a la the time period over here on the 24th of March, which led to a big drop down. So we're doing a good job on that front overall. Let's just scroll on down the way towards the 4-hour time frame and see how this is going on. And of course, we're above the 20 period moving average here, which is the basis line of the Bollinger Bands. Haven't had a retrace back down towards $703 recently, which is now below where the current 236 lies at, but we didn't actually even open and close below that point of the $700 psychological sort of level, round number thing, and we've moved then on up the way towards the next target, really overall taking out our previous high. But what we see here is a diminishing volume stack down below. You can see here as well that the volume hasn't been anything to write home about during this period of time, and it's not like we don't have reasons to look in the past or areas to look to in the past in terms of the price action with regards to where we've been recently. Let me just what am I saying? We don't have, it's not like we don't have historical price action to be looking at. And as you can see here, in terms of the movements up the way, while it is positive, it hasn't really changed anything with regards to what we talked about in yesterday's episode. This horizontal line in here is a 50% Fibonacci retracement taken back from all the way here over here using our all-time highs down towards the subsequent lows. So that's what that line is, and all we've done really is come up here and stick our noses on it and done nothing, you know, spectacular also quite yet. If we were to burst past this right now, then of course you would expect to come down and retest this area or some area in and around about this zone, given that of course we are at the top end of the Bollinger Band. So if we broke out of this thing, then, you know, the subsequent potential for a retrace of some sort or another becomes quite distinct. You've got a good degree of confluence, if you like, with regards to that all happening. Then if we do actually, you know, move on the way and we kind of ignore any sort of confluence aspects of things or whatever, not confluence, if we ignore any sort of any sort of retrace aspect and we're just simply talking about things from the upside, then 850 becomes that next target. That lines up with what we were talking about in terms of the Fibonacci retracements there a couple of minutes ago. And of course in here as at 750 is where that 50% is, and that would be a measured move off the back of that thing. Well, of course this is happening in the face of having pushed up the way here, we've not got divergence between these most recent of highs. So the 19th of December high and the current high that we've got here, not divergent. Looking back the way as well, that 30th November high that we had over here, as well as, you know, we've burnt off that divergence, and this is what you can often happen. So this is why it's always a warning sign. Why it's really important to look towards things like swing failures, why it's really important to look towards market structure and put price action first when you're doing your trading, and look at the oscillators second. There are people out there who look at indicators and oscillators first, and that's not, I'm not saying that they're wrong. Well, kind of technically I am saying that they're wrong. Yeah, I'm basically saying they're wrong. It's important to put price action first, right? I think that's probably fairly well agreed amongst most people who are doing this trading thing for a living. If we are looking up towards either of those targets though, and we're looking beyond that, and you know, beyond any, you know, say we have a retrace, who cares, whatever, at that point, so long as everything stays bullish and we stay above $755 at that point, then things are good. What you're looking to as your next target towards the top side comes in here in this top area where we see that the pitchfork that we've had on the charts for quite a while. It was working beautifully when we were on linear, and then of course we broke out of it. Just bringing this up full screen so you can see it a little bit easier. Of course we broke out from it, but then when you pop it onto log, you find that it's rather beautiful again, and of course it's coming in here at this 935 area for that next target. These two lines right here, that's a golden pocket. This is obviously from the same Fibonacci where we get this 50% area from, and then on up the way. Now what happens if we go down and test this lower zone now, having come up as high as this? Well, that of course what we'll see then is it will have definitely taken out a 236 of one form or another, and we have this visible for us here when I zoom back out the way, and you can see taken from the lows down there in March over there up towards the highs. This is the same sort of fundamental chat that we had in the Bitcoin episode, really, essentially. Then the 236 lines up here perfectly with the next Fibonacci down from the 50%, giving you a really strong confluence in terms of just the now I want to say harmonics in the market, but bloody Carney nicked that word to use for his own crab and bat and all the rest of it, those harmonic patterns. But the idea of, you know, harmonics and the and what it and in a more generic sense of the market, you know, the way the rhythm of the market, the flows of the market, the ups and the downs and everything else, and that lines up perfectly there as well. So of course, you know, if we were to do that, then that's how that would see, and it's of no surprise, it was no surprise in yesterday's episode when I drew it in live, that this is where those two things line up with. So there's your topside targets. If you're looking for support and not actually going down towards those areas, then at the minute that comes in at around about 680. That's a nice $60 move down from where we are. If the next area then of course 592. If we go beyond that, then things start to look slightly different, and we can talk about different sort of targets for us. You know, first off, the first target you look to is in here at 493. We've got two areas of confluence. If this is an ascending broadening wedge, the textbook Bulkowski textbook target from here in the Encyclopedia of Trading Patterns would take you in here for the 382 at the 496. So you've got the 382 lining up with confluence here, and of course the pattern lining up with confluence here. And if you want to do something silly like put a measured move off the back of this, then your next target lines up with a good degree of confidence as well, down towards, well, I mean, it's the same thing really, essentially, isn't it? With this with the lower end of the pitchfork here, so it's for visual identification of what we could be looking at overall. So that would be that one. In terms of the divergences, like I said, in the daily time frame, we've subsequently managed to push off any divergences between us and the 18th of December. In fact, and as well, it's looking like we've not got them between us and the current price action and the 30th of November. But you know, it still exists here in the DMI. So the DMI is being one of those things which is showing us that, you know, it's still here and all the rest of it. And there's two sides to this cookie. One of them is that, of course, as you can see here, I circled this yesterday, we've now moved into the blue area. We have that strength of trend and everything else. This has been divergent. It is a warning sign for us that maybe we see a pullback, and that would tie in perfectly with Dow theory and the 50% area that we've arrived at. So that would tie in for you, and there's an easy risk to reward move. But then likewise as well, the reality of this is that we've got so much space in this area here that to move up towards now, that it could go on all the way up, take out that divergence there, take out that divergence there, come in here, even end up being divergent if it wants to, or even take it out. And what it's done is come up towards this 40 zone, and if we look towards the past, then we know that in big bullish runs that this can happen. So if we actually do want to see things accelerate up the way, of course we do have divergence giving us that warning, but this as well is a chance for what is known as a reset of the oscillators in this area, and that's how that would work. Now, of course, for it to have actually subsequently have really been one, we would need to take out those other areas, and having it be bullish on the Fibonacci, on the RSI and the MACD currently leaves us with that being a strong option. However, we do have the real threat of divergences on other areas to look to as well as we come in with this time frame. So we might as well just jump on up the way and find some of them, because I'm pretty sure if I look here, I'll find something on a bigger time frame, such as the 3-day, where as you can see, versus the 23rd November up towards the 29th of December, that is very much divergent. And of course, you know, this is us looking into, and bearing in mind that you want to look at these sort of initial impulses up the way, and that's divergent across the board. So you could look back in the future and say, why did I not see that? Well, it's maybe because it's lurking around on a broader perspective for us. And then of course, you know, that's fair enough. If we want to reset that oscillator instead, having done it with the daily one, maybe we just kind of go on, and that's how that works. So that's how you would see that happen. Easy areas to then to look to in terms of movements for the sort of quick fire staying alive staying alive mode would come in with, for instance, taken from our last significant low here on the 23rd of December, just before we started this run up the way. This is obvious, you know, and this is also Fibonacci, which expands between the top end and the lower end of this wedge. I'm not ever picture perfect with my lines on here. I never particularly care. I want to demonstrate to people that you don't need to be, so I almost deliberately don't draw them in perfectly. As you can see, that's also not drawn in perfectly, and in reality we're probably actually testing this line as opposed to being supported by it right now. But whatever, you know, it is what it is. Who cares? The 236 comes in there at $709, so you could have a target down towards the $680 where 382 is, and that lines up in terms of everything that we've talked about previously up to this point here. You know, those numbers just keep getting repeated again and again and again, and that's because everything's lined up perfectly. Why is that? You tell me. I don't know. You tell me, right? Great. AB, we're talking here 1 hour 6 minutes in, 1 hour, call it 1 hour and 7 minutes in or something like that. We're going to jump on over to take a look at Chainlink. Just as a quick disclaimer then, before this part of the episode really starts, this lower upward sloping support line is just the same as that Ethereum one, where of course, you know, in reality it's probably more like that, but obviously I drew it in fairly quickly on a different time frame, and that's, you know, why we have that discrepancy with the price action there. So I'm going to just get rid of the Bollinger Bands on this one. They're not actually needed at this point here. I will show you, I suppose, just before removing them here, that in the 24-hour time frame we've come back down. And is that wick there on there? No, it's not. It's not as low as that. It wasn't yesterday's wick that we came down and retested the lower end, rejected from the median line, yada yada, whatever, you know, all that's fine. In terms of like the 4-hour time frame, we're in this lower section, but really that's not giving us any great deal of insight right now for us at all, to be perfectly honest with you. It's only whenever we start kind of pushing those zones that the Bollinger Bands become really kind of relevant to what you're looking at, or at least pertinent, while they're always going to have a degree of relevancy, right? I hope my use of vocabulary there isn't annoying to anybody. So our current target there has to be, okay, we're going to have to be that we're looking up towards this area here. What's the assumption here? Well, the assumption is that you've got 1, 2, and 3 touches down here on this thing. You've got 1, 2, and 3 touches here on this wedge, and it's not so far shown to be rubbish yet. It's not broken yet. It's just currently this structure that we're in right now, and it remains in place. Now, of course, this is a negative pattern, and it could see, because it's a rising wedge, it could see a drop down back down to this area where I have this circle drawn in here for some reason, down towards the target of say $9 for instance, or whatever. If we broke out of it now, it'd actually be worse and take you down to $8.50. That's a target that we've had in the past, of course, as well. But if we go towards the top side, it'll take you up towards $15, $16 even, is $15.50. We'll call it $15.50. Now let me just do a quick sort of reminder for folk. This here towards the top side, what that constitutes is an 18% move up the way. In terms of if we have this towards the downside, so it's 18 towards the top side, right? If we do this towards the downside, what we're looking at, and it's not going to be a massive shock to anybody when I say that it's 22%, it's not massively different, but it's a little bit more because downward percentages are always kind of more or less always more than the upward ones, whatever, in terms of that, whatever, doesn't matter. But then if you're looking between these zones here, just between these two, you've got an 18% move to be had just there. Quite often you'll find that trading within ranges is probably going to actually serve you quite well, and is an easy enough risk to reward basis for you, which is why I'm able to say that your next target on this one really does reside towards the top side, in full knowledge that I could be very rapidly proven wrong. Absolutely, that's fine. That's just the risk you take when you're trading, because of course if you're using the Popperian method, really overall that's what you want to see. You're looking more to be proven wrong with a degree of eagerness about it, so because you'd rather be proven wrong quickly than to be sitting in an underwater position for 3 months saying it's worse to be in a position you can't get out of than it is to be in to not be in a position at all. And then how therefore would you manage this? Well, you'd be talking about this and saying this is what the easy trade would look like. And on this one now, of course, just to be perfectly honest with you right now, right, rather than explain in micro detail everything to look at on Chainlink, I can't be bothered, right? I explained this all in the past anyway, so I'm doing it this way, which ostensibly actually looks like more kind of difficult technical analysis to do, and maybe even more appropriate, and you'd be forgiven for thinking, if you just tuned into the channel for the first time, hey, this is even better than what you normally do. Why do you not talk like this on a daily basis? Well, actually, because just like how Navanethan said in yesterday's episode, I always take you 90% of the way there and leave the last 10% for you to do. So while in a sense this maybe looks like it's better, or maybe looks like it's, I don't know, whatever other sort of positive term you want to use, it's actually me being kind of somewhat lazy. Full disclosure, that's what that is. And when you see other people acting like this on the internet and heralding it as if it's some sort of second coming of the Jesus Christ technical analysis world, no, it isn't. It would be way better for them to give you the skills to wage war on the fishes yourself, as opposed to giving you a slap on the face of a wet fish. Well, there we have it, and I'm just slapping in the face of the wet fish here in terms of Chainlink, right? And this is how I would do things, risk to reward. And why would it be, and why does this work out as being one of these perfect type trades for you? Well, most cases you don't actually need to have a 5-to-1 risk to reward ratio for you to be a successful trader. This is actually what would make you an extremely successful trader, right, as opposed to a successful trader, right? Because a successful trader would probably be happy with something along these sorts of lines, any of these sorts of lines in terms of risk to reward. But no, that's not good enough for the competitions. Let's stick this in with a 5-to-1. So this is your risk area down here, and as you can see, in the last 8 hours, this has obviously opened up as an opportunity for people to trade it. Looking over to the left, this is where our previous low was, and if I was to describe this without the risk to reward box on, what you would normally see is me talking about things like this is your fake out zone. So if I just remove that for now, you'd be so familiar with saying, here we have this pattern, and what we could do off the back of this pattern is go either side of this, and these are the two potential targets off the back of that pattern, yada yada yada. And of course, if we were to push outside of it, this is your fake out zone, yada 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 yada, right? You've all seen me say that 1,000 billion times before, but there you go. There's the man behind the curtain and how that all ties together. And what else do we need to talk about? Upward trend potential for us, but this of course is only just slightly higher than the previous one, and it's come in without, it's done good. It's done it without divergence in this little phase here. In terms of the upward movement, unfortunately we don't have any hidden bullish divergence to give you like a real kick in the backside towards the top side, but this is just normal markets, and that's just the way that these things go, so that's fine. In terms of this trend, which is the strength of trend, F off options. The strength of trend for us here, what we have of course is the divergence between the positive and the negative. Sure we do, and all the rest of it, but actually what we're seeing here is the DMI is moving, the ADX is in chop land, and we really don't have anything more. We have to wait till we get back from the chops before we can cook our dinner, okay? And that's basically how that's going to work. We can see then in terms of significant areas up above us and below us, what have we got here? I mean, obviously we've done a nice solid 236 or more Fibonacci retracement. It actually looks like it's far more. I mean, what are we talking here? At least the 382, right? So yeah, the 50% came in here, and that's there you go. Dow theory would say that you could potentially turn around from here if you're looking for a sort of justification for that on the go. Okay, so there's that, but and then when we got this sort of 618 over here in terms of that as well, just putting this on here for context so you can see, we obviously got the 618. We in fact came in for the 786, yada yada. So what we're really waiting for is the resolution of this kind of consolidation-esque trend towards the top side. So there's this movement, we're bound within these zones, and that's totally fine because really we're talking about a 20% range overall here, but there's this overall upward sloping sort of slant towards thing, and I want to see this continue, and in fact I want to see it break towards the top side. If it doesn't happen, absolutely prepared for that. And in terms of risk to reward, it's totally fine, and that's just trading within the range. Okay, if you wanted to go for something ridiculous like a 10-to-1 risk to reward, which really in all honesty you shouldn't do, even though like the likes of, I did it with 1 inch between yesterday and today, but whatever, that was if it was more money I would have cared about it, essentially is what I'm saying there. Then you could, right? You could, but there's no point in that, right? There's no point in that for the longevity of you as a trader. In terms of looking down the way again as well, do we have any bullish divergence here? Yes, sweet. So we have some hidden bullish divergence here on the RSI, on the 1 hour time frame, on the low, the previous low. And in fact, if we zoom on in the way, this body here closes lower than the previous body, so this is classic bullish divergence in terms of this chunk here as being I drew that in and the arrows pointing towards the top side at the end of that. This turns out to be bullish in terms of this movement down the way, in terms the so-called downward trend since the 27th of December to where we are now. What you see here is you've got classic bullish divergence, but if you zoom out a bit and kind of think about this, instead of being like that as being an upward trend overall, then what do we have here? Well, we very much have, of course, hidden bullish divergence between those two. So that's your dynamic there, which is what makes that a trade setup, if you will. Okay, cool, nice one. Moving on, that's the end of that one. So we kind of just sort of did the man behind the curtain episode for Chainlink today instead of all the usual. Right, live time 1 hour 16 minutes AB. I'm just moving on to XTZ right now, and we're going to take a look at Tezos just real quick here. Overall, what is this? Get off my screen. You get off my screen as well. Don't want either of you on my screen right now. So here we have we're at $1.98. Now we went into nice English, Rocky. We went into technical analyses for this in detail yesterday, so that's cool. We kind of already covered everything off, and we know that the key area here is this 198. Well, you can call it what you like. The lows today have been down there at 195. Okay, so yesterday we saw the lows were 197. Today the lows are 195. We've been talking about 196 as a level. Well, let's not split hairs over the sake of 1 cent. Over 0.05% in terms of the movements here on this 0.5 0.05%. Yeah, let's not split hairs over that. You know, you're talking the difference of trading fees in terms of your thingies. What we have here is us coming down and putting in a low so far. How does that low look then, right, in terms of what we've been doing recently? And just spreading this back out the way, you can see upward movement over here. You can see that we don't have that bullish, hidden bullish divergence like we saw on Chainlink here. Just to put things into context, in terms of this downward movement then, just like we did with Chainlink as well, to put things into context, what do we have here? Well, we don't actually have that bullish divergence, the classic bullish divergence between, for instance, that low there and that low there on the RSI, as you can see, between those points. So we don't have that to celebrate here like we do on Chainlink. But are we going to see it follow along the same sort of structure anyway? Perhaps we will, which is what brings me back to what I was talking about during the Bitcoin section of the video and whatever, when I said it's probably wise to look to market structure first always in terms of your trading. Really, overall, what we could do here is a number of different things. I'm going to just make it easy on your eyes and on myself by drawing this in with a parallel channel. As you can see here, high, low, high, low, high, low. So far, all good. That means that what we can do is reiterate the point here, that this point is obviously key for us. This point here would be where your fake out territory would be. This point here would be where you would be taking profit at. Between these two zones here, what you have, of course, is a 13... Shut up, policemen. Do you know they're not allowed to put their sirens on outside there? They're not allowed to, but they're police. So what are you going to do? Who's watching the policemen? I can phone up and complain about it all I like, but what difference does that make? Zero. So there you go. Anyhow, yeah, it really frustrates me, that. But yeah, so this is your profit taking area for you. You know, if you just wanted to ride this towards the top end of that parallel channel, you're looking at a 16% move. Everything else remains the case in terms of, like, you know, the chain like type scenario that we were talking about there. I'm not going to draw on the risk to reward move for you and everything else. It's all right there for you. I'm pretty sure you can extrapolate that out from what we were just talking about there a moment ago. Instead, what I'm going to do is look at how we've been doing so far with this little kick up the way, which ultimately could be described by some people as being some sort of, you know, nah, it couldn't be. You'd be a bit mad to call this a bear flag, but you could if you were mad. Instead, really, what we're going to just look at this here and say, look, so long as we stay above our fake out territory, that's where that 236 is. Is that any surprise to me that there's like that? No, it's not. Did I know in advance that that's where that would line up with? No, I didn't, but here we have it. Chart something every day. I guess you start to have the chart speak to you rather than you speak to them. And we can see that we can see that so long as we're above that 187 zone, things are good. We've come up and tested the 382. In fact, we've tested the 50% and dropped down the way. So, you know, that's not ideal. It's not ideal, and obviously as a result of this extraordinary wick there, that puts us far below the 236 on this one, and that's clear. And as you can see here, as just as a lesson, which is so often the case, and I've tried pointing it out so many times, and I hope it's settling in for people, that you can see that between the top, I drew a Fibonacci retracement from up there down to down here, down to down. I drew in those the two Fibonacci retracements, and what do we see operating perfectly between these two zones? Well, of course, a movement up towards the 50%, touching that, and then coming back down and closing below the 382 was the equivalent of going below a 236. Okay, that 382 that's just there is got a 236 right there on top of it. Okay, so when you're looking at, if you want to look at sort of people talking about the value of Fibonacci retracements and all the rest of it, you often see that they kind of only look at them in isolation, whereas if you put two on top of each other and you're aware that there's a 70% chance of one of them not being broken, and then if it does get broken, there's an 80% chance of it going on towards the next one. Was it a surprise to anybody then when we took out the 236 here that we came down to the 382? Was it really a surprise when we know that there was an 80% chance at that point that would happen? Was it a surprise? Was it really? I doubt it. So here we have it, and we've come and we've turned around at this point so far, and that's good to see. Really, what we need to see happening is generally speaking, these broader term, you know, when these drawings start to look a bit silly here on the go, and what we need to see happening is movements towards the top side. As you can see in the broader term perspective, 3-day time frame, we've not taken out that low over there. We've come in and put in a low over here, which is higher than it. That's of course that 188 area. It's no surprise then, of course, that becomes so significant with regards to everything we've talked to up to this point. And then that would be you know, what we need to see happening is going on and trending towards the top side. So the clear area that we need to have as a target is 260, and if we're here at $2 at the minute, you'd be a little bit crazy to sort of 1-inch it all the way up towards that 30% profit taking target, although that's of course where it is if you wanted to take profit at that zone, and that's you not taking out the previous high. Now if you did want to go on for a higher high, then it's any man's guess at this stage where it could be, although it's not really any man's guess. I mean, let's just be honest about it. For instance, you've got some clear and obvious targets, so as soon as you take out 2 to 2 2 2 to 2 and around about that zone where that 236 Fibonacci resides at, then the next target towards the top side comes in anywhere between $3.30 up towards $3.40 or whatever. If you wanted to, well, that's not the next target. I mean, don't bullshit people, Rocky. The next target's $3 itself, of course, obviously. Then it's those ones thereafter, and every single one of them offers you up a fantastic, super fantastic, absolute lightning move towards the top side, where of course, you know, you're looking at there at your 30%ers, and then you're looking up towards 50, 60, blah 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 blah. That's it. Drop the mic. We're done here. We're done here. Jumping back over towards the chat and just catching up with y'all. So fantastic. Nice to see that there's been lots of chat in here while we're going on. I'm seeing down here towards the bottom that Artie Pyle says, granted that's Irish, it's still UK. I wonder what you're talking about there. I'm going to have to read about that, see if there's some cultural nuances being discussed amongst folk. As I can see here, we have Balkan Football join us. What is the best to invest in right now? Easy answer for you, buddy. The best thing to invest in right now is yourself. Your future self will thank you for it. That's not a cop-out answer, by the way. It's one of the core tenets of this channel. I say it in almost every episode that the number one thing that you really should be investing in is of course yourself. The key skill as a trader is to be self-reliant. Now of course I know that undermines your question somewhat. What's the best thing to invest in right now? What do we think? Well, what do we think? Binance versus the BTC markets. Change it by increase. You got that Nebel myth, they're all shite. Theta, is Theta the best thing to be invested in right now? I mean, if people want to make an argument for it, then they probably could. Theta's performed fairly well. Let's jump on over towards the USD pricing, see how things are going along. They're all doing crap, obviously. Top end myth, you know, super low cap coin. If you want to take a low cap punt on something, this is a really, really good one in terms of movements. Obviously people think, Rocky, what are you doing? That's extremely generous of you to be giving out all this technical analysis on random things for free, and they didn't even donate anything. Well, I'm just in a generous mood. You've got Artie Pyle to blame for that one, but we're still way below the 236 over here at 20 or 2.5 cents. If we wanted to, you know, really get carried away with this thing, we're going to need to see this thing kind of increase in its numbers up by a solid 75% up the way move here anyway. So, you know, you could invest in this. It's looking fairly decent overall, but there are a couple of warning signs for us. Let me just point out that you've got like this high, you've got this high here and this high here, clearly not divergent between these 2 points. What you have here is the potential for this to turn around and become divergent. This is the 3-day time frame. You know, if that turned around, it would become would it? Let me just sanitize what I'm saying, because I can see there's the elbow on it here. Yeah, no, yeah, it would. No, it wouldn't. There's the thingy on it. Yeah, it would. It could if it were to drop down over the period of the next 1 day and 2 hours or so, jumping back down the time frames. What you've got to look to as well is you've got this, you know, this movement up the way here, which has not really achieved anything in terms of its movements, but if it does get above it, then of course very, very good. And that means maybe this is the best one to invest in at the minute. Maybe, but as you can see in the 24-hour time frame, very much bullish, bearishly divergent here at this top, which could then bleed up the way into the 24 or from the 24 to the 3-day. Shut up! Time frames, making things a bit of a mess come next week, of course, if we're to see things turn around. Now what we do have as well here, if you're looking at things on a lower term time frame in terms of pattern, is of course I say of course, but it's not really of course, but it is slightly, is this sort of structure here. We're of course taking out the sort of 0.18 could lead towards a move up the way, and in terms of percentages, every single move here is completely ridiculous. You're talking about a 41% move towards the top side. However, I want to say that all of that still applies towards this slightly larger larger cap, yet still low cap coin of Theta, which potentially has a better setup overall for us, potentially in the meantime. You know, if you're looking just at a couple of different coins, symmetrical triangle is not as good as an ascending one, but of course this actually bears much more resemblance to the textbooks and what you'd be looking at in terms of reality. $2.17, you know, is a movement up the way in terms of percentage profit taken, percentage targets 35, so not 46, you know, not insane moves, etc, etc. So there's all of that to be considered. We've also gone up and touched off here of the 236 Fibonacci retracement point, by the way, as well. You might notice in the world, some people say things like, I've never seen these things get hit, etc, etc. It happens quite a bit. Here we have hit the 4.236, for example, on this particular chart, and we did it so much. I mean, the all-time highs, for instance, on Chainlink was precisely that movement as well. Full disclosure, why am I saying that? I'm saying that because I heard Eric Crown, who I think is not only probably a really nice guy, and I'd love to have a drink with the guy, super, he's quite down on himself. He's like Navanethan, actually, you know, saying, oh, I'm not smart, when in fact he actually is smart. He's quite a smart guy, and he's a really good trader as well, so a lot of good things to say about the guy. But he was saying there that you don't really see these things get hit, and that's totally fair to say. It's absolutely true. It's just that you do, it's just that you have to be in a sort of Mickey Mouse market for that to happen in the first place. And well, here we are, and this is it. So then your next target towards the top side, what would it become? Well, they don't even give you out of the box decent numbers to look to, really, you know, beyond the 4. You've got 414, you've got 4618, you've got stuff like that, 476. All these things are all bunched in right next to each other, and this is kind of relating back to what Eric Crown says as well, again, you know, that you would expect to see things kind of turn around out here. Now if they don't do it, it's because this here Fibonacci retracement point between this high and this low is just, you know, basically BS. Let's just put this into a bit more context by stealing the numbers, stealing the guy here for us, and saying what this looks like from a broader perspective over here for us, and saying where we've actually come in from if you don't use a sort of semi-bullshit Fibonacci thing. And we've come up towards the 3618 there, as you can see. So, and then this is what resolves back into what Eric Crown was really meaning when he said this. And of course, if we came up here, we would be touching these all of these high targets here, and it is quite unusual to see happening. But then of course, then you could sort of de-bullshit this some more if you wanted to in various other ways, I suppose, or whatever, but I'm not going to at that point. I'm just kind of putting something into context. I'm only talking about this because this is just appearing on the charts. I had no idea I'd be looking at this one before talking about it or whatever, but you know, there it is, and we're talking about it, so that's what's happening. So maybe there you go, maybe there's your answer for you, maybe that's it. Now I think that you would just need to go ahead and jump into any of these coins. No, are there other coins out there that have got maybe better ideas behind them? Perhaps. Are there good ideas here? For instance, you know, we've failed to take out, in terms of the bearish case scenario, the 236 over here on Avi. We're at $81 here. We kind of found support, so to speak, in there at the $70 area where we had the 382. We've done enough in terms of that Fibonacci retracement and all the rest of it to kind of move on with our lives, and maybe, you know, maybe this is a decent investment opportunity for people overall. Do I like the look of this chart right now? Not really. A couple of things kind of sticking out at me. For instance, the overall upward move there, accompanied by the overall downward move here. But as you can see, the vast majority of its life on this exchange versus Bitcoin, versus USDT, sorry, on this exchange, Binance, has been kind of bearishly divergent throughout, you know, and that's what happens when you've got zero price history in the past to look to. So this is just another lesson to folk in all-time high sections. In all-time high sections of price action, you're often going to see bearish divergence, you know, during all-time highs. More, you know, you just are, right? It's just such. It's just a warning sign. Of course, it becomes a very big. It becomes a sign which turns into a mad, screaming, blaring siren, screaming, blaring, noisy, how can you miss it, don't be foolish, warning when you go past the 236 for example, or the BBs to the downside, or the structure in the market, or the blah blah blah, you name it. There we go. That's, you know, just something for people to be aware of. So that's why that's kind of happening on the go. So maybe you think like that, but then again, would I want to just dive in on an investment on that one? Probably not massively myself right now, to be perfectly honest with you, because there's other things out there that I would rather be trading, you know, in general. So just to answer your question, don't really know why I did that. I hope you choose to come back and watch the channel again in the future. Balkan football. Yeah. My best trade ever so far, says Michael John Scott earlier on in the chat, was buying ICX Icon in 2017. Got in ICO at approximately 11 cents. Sold at $6. Wow, that's enough to make you sick, isn't it? $8, and $8 still have a big bag waiting for South Korea to rocket. Well, that's inspiring for people, you know, a beautiful ICO story. Michael John Scott, by the way, is one of these people in the chat. If you're not aware, is somebody to be aware of. You know, he's a guy that has gone all in terms of his entire life, essentially, with regards to crypto a number of years ago, and is somebody who has a good deal of experience, obviously, at this stage, and is somebody who's worth listening to from time to time. Okay, so that's, and the community is full of these people. It's full of it. I'm not meaning to single somebody out here in particular. Just wanted to say so. Johnny Smith says, "Yo, Rocky, could you have a quick gander at EWT for me, dude? Nice." Right, Johnny, you're a bit of a cheeky one, Johnny. You're a bit of a cheeky one, because you come along here and ask for that all the time, and you don't donate to the channel, and you're not a member, and you're not a Patreon, and I don't think you're in the Discord, and you don't leave comments on the videos. Do I do it for the third time in succession? I'll let other people decide. Other people in this, I'm not going to decide, right? You guys, the community can decide. Do I look at EWT for the third time in a row when Johnny Smith's come along and asked me to? Or do I not do it because he is, you know, kind of taking the piss a little bit? What do you think? What do you think? Because my obvious inclination is to do it, right? That's you know, I'm geared up to do this. Is what it is. Hey, Johnny has looked at EWT before. Yeah, well, so there's one person's opinion. Let's let the others weigh in on it. I'm not trying to be a dick here. Really, I am trying to be a dick here. It's just that, you know, I don't want to show favoritism. Help a stranger? Nah, skip it, says K-Doc. Need a couple of more votes. Need a couple more votes there to get it. Is he a troll? Says 3000 Trin. Shilling the weed. Sorry, Johnny. Looks like the general consensus is that we're going to skip that one today. Now, of course, you have been told. Artie Pyle's generosity let me give some Balkan football guy a bunch of chat about random shitcoins or whatever, and a little kind of chatter about stuff. But you know, we'll just skip that one. Not a stranger when it's the third time. That's true. AB, that's it. Lol, nah, don't do it, says David Ethan. I can't really comment as I've not yet contributed, but I will. It's not. That's not a. It's. Honestly, it's not the thing, you know. It's not the thing. It's not. I think everybody out there gets it, you know. Everybody gets it already, but this computer says no, says Leechinic. It's on a downward trend, says K King. There you go. There's your answer for you. So K King's kind of giving you yeah. You all understand anyway, right? You saw how much it meant to me when Artie Pyle was generous earlier on. That's a good feeling, right? That's a good feeling to have. Okay, that's it. That's a good feeling. Navanethan Lamal, the guilt. Yeah, there you go. I can't. And I've been in the Rocky Crew before 10k. Yeah, I cool. Okay, so you do right, Johnny. I don't want to. You see the pain, the struggle. Let's just bring up the. You're all going to call me capitulating, weak, silly pants. Let's bring up the chart, right? Let's bring up the chart. It's called Energy Web Token, by the way. Let's bring up the chart. and check in with our potential moves. Let's see, I've got the 4 hour on. Oh, what a bollocks that was. So this is kind of what I was talking about earlier on it's Johnny. We're all just having a laugh. We're all just having a laugh, right? If all he did was ask, then I don't think it's a problem. That's true, and he only asked once. He wasn't coming along and pushing it or anything else. Here, we're on there. It's just a bit of fun. And besides, if Johnny's been here since before 10k, which you probably have. In fact, you have put comments in the thingy, but you're right. It was quite a while ago since the last time I've seen your name popping up, I think. You're an outcroptician. It's all good. Johnny knows the buttons to press. Haha, nice one. Fucker. Sorry, this is what I was talking about with Nav and Ethan. See that trade that you're talking about, where you're happy to stop out in Johnny dropping the pre-10k card. What am I saying? Yeah, Nav and Ethan, you were talking about how you would stop out at the low 29s, and I was saying these sorts of things can happen. Well, here's an example of it, right? This is this trade idea that we had, and we took it from over here, right? Essentially, this is when I drew it in. I'm assuming it is, right? Roughly somewhere in this zone, and the prices then went up. And how much did they go up? Well, they went up 15%, okay? Like a big chunk. And there was kind of no excuses at this stage to not have your stop loss and profit, other than the fact that perhaps Binance and the like are really crap for doing that sort of thing. And therefore, you might not really even have a flexible option when it comes to doing your stop loss in a way that is intuitive and easy to understand. And those excuses I perfectly understand, especially for people who aren't, proactively trading, for a living or whatever. Like, okay, so but beyond that, right, there's no excuses. And then we came down here, dropped down the weight, and then made it back up again, theoretically giving you the opportunity to kind of open up this trade idea again, from where we are just now, right? From where we are just now, we should probably address. I thought that was a red wick there, and then it's turned green, and I guess it was always green, and I was just being colorblind. We should probably address the downward trend idea that K King mentioned. So just going up towards the 3-day time frame, we can see that is clearly the case. It's been in a downward trend for a long time, but we do have this potential for a bottom coming in here, as it's been kind of bullishly divergent throughout its entire life, which is the same sort of a way that to bring us back towards the chat before. What did I say about all-time highs and how bearish divergence is either more or less likely to be seen, and then should be treated more as a warning sign as opposed to a blaring screaming klaxon of a siren telling you that you're a fool to miss it, up to a certain point. The same thing can be seen here, but it's the reverse situation, right? We're looking at an asset which has been in two things. One, in a downtrend its entire existence on this particular chart. Two, bullishly divergent for its entire existence on this particular chart. And you can see how then, of course, what I'm doing in a sense kind of undermines my whole divergence chat in every episode. But it's not about whether or not divergence is some sort of magic key to unlock your potential success. It's about the holistic understanding of what it is, and you don't kind of get there overnight, right? And this is just part of that, and it is probably, if in terms of a concept with regards to trading, the most powerful tool that you can have in your armory, despite the fact that I've just gone and looked at two extreme examples where it completely makes no sense whatsoever, okay? And a big part of that is the lack of historical price action with these things, right? And we have this over here. If we were to have made it up above these zones and actually successfully closed out this area up above the 236, then at $6.89, maybe we start to turn things around. But until we've done that, we haven't done it. We have a low in here, and of course that's that bullishly divergent. But until we've gone past this zone, it isn't fantastic. And in a lot of ways, maybe this trading idea would be better to be something along. That's so annoying, isn't it? How it covers up your area so you can't see where you're putting it as you move it around. It's kind of annoying that, but it'd be better to have this maybe up here, and being judicious about things and looking for things Yeah, maybe you'd be better to have this. I'll come back and address that in a second. Maybe you'd be better to have this area up here and thinking, I want to see some structural changes with regards to this market before I can start really getting into the whole telling my friends and family how much they're missing out on something type of idea. But you have it here, you have what you have here is just generally not great with opportunities if you want to take a punt at something. Now, the same could be said the other way around. The same could be very much said the other way around, and let me just kind of demonstrate that for you real quick with regards to your potential. Now, I'm not 100% sure in terms of what flexibility you have with regards to shorting this or whatever else, but if you're looking down and saying what we're going to do is we're going to put in another all-time low at some, this is what we've done time after time after time. The trend's your friend until the end of the trend. We're going to put in another all-time low on this one. Then maybe you want to do a sort of risk to reward type trade where you're managing it around about these zones, right? And now in terms of how does this make sense? This here, you can see looking at the previous prior price action in this zone that you get stopped out so quickly and easily if this is your trade. Well, that's because you wait for it to go up and then come back down again and then on its way down past those zones. Then you're looking for your entry at that point. So this is of course the 3-day time frame. On the 24-hour time frame, you can see that we moved up the way, got negative candles. Of course, this came up and wicked around. You're not getting in on a trade on this particular candle. At this time it's not really looking that great, but then you have the next day opens up and it's got weakness. It just goes down the way. It takes out the 236 at that point, and then from there on what you're looking at is having a trade which is obviously going to sit you in a position of profit, and you'll be able to take it from that point, missing out on all of this, missing out on missing out on more than 11%, nearly 12% of the move you miss out on, right? Because that there offers up, in terms of what we're talking about, much more risk compared to reward, and your job as a trader is to buy and sell risk and reward. And then what you've got coming all the way down here is a 20% move, so instead of looking for that 30% move, you're looking for the sort of 20% move. Now of course we were also saying that we wanted to come down here and put in lows. In fact, this here, you could have debatably put it down as far as this, for instance, and looked for a full 8.92 to 1. But if you're only looking for 5 to 1 in terms of risk to reward, then you've made it. You've taken profit, and this was I almost said a successful because I meant to say a fucking successful trade for you to have, right? And that's how you would manage things in and around about these zones. And therefore, where do we find ourselves right now? Well, what we find ourselves right now is in this sort of you got your fence there, and it's got that top on it, and it's all barbed wire, right? It's all barbed wire, and until such times as you've made it past this zone here of the barbed wire fence, then you're taking a big risk, right? Whereas up in this area up here, you're talking about loads of freedom to make decisions about stuff where your risk is massively reduced. Now, what you can do, of course, is simply just ignore that and operate off the back of the stuff that we were talking about before. Okay, so let's look down the way again as well and see, is there anything in terms of anything shining out at us for us in terms of this time frame. We've got this real distinct area of resistance coming in there right at that 236. Obvious, so obvious. Look at it, it's just screaming at you how this is an area of importance, but we also have this slight upward slope here as well. Can we maintain any of this sort of thing? Are you getting decent risk to reward opportunities in around those zones? Well, you are, and that brings us back to the sort of the discussion that we had earlier on, and maybe you're looking at these sorts of things overall. If you wanted to go for a 5 to 1 on this though, you'd be looking more like that along those lines. Let me just get the short out of the way. So that's of course 2.83, and that leaves you with, again, you've got a degree of risk in what you're taking here. So what are you better off doing? You're better off waiting for it to come in and then start to look good so that you can ride it one way or the other, and you'll reduce that risk that you're eating at any given time. Let me just scroll on up the way here and go back to that. Michael John Scott, you're a special legend. You're a special type of legend. No free lunch. Only joking, rock on. That's just so funny. Coco run, sis. Did I scare Coco myself? Wow. Tip war. AB Lopez, again, for MJS. That's fantastic. Don't let me forget, by the way, to update this sort of a thing. Now I want to have like a decent something that looks better than this really tacky box over here. But I'm sorry, Sean. I'm sorry. You can go down to number 4, but you might not actually make it onto the screen. And then over here we've got number 3 is Smoking Token. Number 2 is Dragon Master. Whoops, 3. And then what we need to put in here is number 1 and number 1, because you did it twice. Number 1 and number 1 is of course it's shit, I got it wrong. Number 1, it's not, because Artie piled it first. Number 1, this has to go number I look so stupid. Stop looking so stupid, Rocky. You're trying really hard to look cool and impress your friends. So stop looking so goddamn stupid. There we go. So number 1 is MJS. Is it cool to just put in MJS, because that's what we're all calling you anyway, but we know that's Michael John Scott. And number 2 is Artie as well, right? So like that's what we have as a yeah, that's cool. So there we go. Of course, as well, in terms of those other numbers, they're still there. I can always drag it up and keep the all-time sort of leaderboard type thing going, but what we have is you two at the top. And you're absolutely fantastic. By the way, Michael John Scott, I really appreciate it. I really, 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 really do. Buy a nice malt. Buy a nice malt. Is that what I should do? What's your favourite? I want to know what your favourite is. There's quite a lot of choice. Well, there's what? Is that the stupidest thing I've ever said? I wonder. Yeah, living in Scotland, there's quite a lot of choice, and you just said malt as well. You didn't specify, and there's a lot of good Irish whiskey as well. I mean, if I had to choose a country to get my whiskey from, it would be Scotland, and it would probably be one of the distilleries which I drive past on those times when I go up north and whatnot myself. It probably would be, but maybe I should go and get one that I've never had before. Let me know what your favourite is, though, if you have a favourite. Wow, that's just so fantastic. Yeah, that's so fantastic. These are brilliant people. And by the way, you can do the Patreon thing as well if you want. It's all good. Is a pocket contest going on? Do I have 102? Yeah, exactly. Okay, you guys get a Texas yeehaw for the donos to Rocky. Thank you so much. That is it. Definitely here as well on that one. K King, fantastic. Don't forget Artie. Yeah. Sorry, K Doc. I was doing that and I was forgetting. I was getting a little bit confused in my head there. Rockstar, do you have enough time to look at ARPA? Cheers. If too late, to no problem. Look at that. Look at the humility, the humbleness. I mean, my God. I'm probably never going to stop saying it. To me, there's like a massive wealth of. It's your birthday tomorrow, Johnny. Fantastic. Happy birthday coming up. You can do it again then, tidy. You cheeky bastard. It's cheeky, and he just said tidy. I suspect you've got a touch of the Scottish in you there with that chat, Johnny. Anyway, yeah, Michael John Scott, look, yes, I've got more than enough time to do that. I'd be absolutely delighted to take a look at that. Take a look at that, by the way. Wait, would you prefer it to be John? I'm known as John. Long story short, my dad left my mum. He was called Mike, so John ever since I was a baby. Well, MJS is pretty cool, but I think really to be fair, that while cool is cool and everything, there's something even more important to be said about loving one's mum and the name that people know themselves as, and all of the history and reasons that go on into that in the background. So I'm changing that to John because I think that's absolutely legitimate. Absolutely. By the way, those were pounds as well, not dollars, right? Yeah, so John, it is, by the way. I've got no problem with that. Long story short, thanks very much for sharing. I really do appreciate it. And by the way, everybody, take note. This guy, look what he said. Do you have time? If too late, no problem. I mean, this guy's just doing it to support the community. It's absolutely fantastic. That's absolutely fantastic. Yeah. Anyway, I can't get enough of it. Good. So, what did you say, ARPA? And let me know then. Are you trading ARPA right now? Is it something that you're thinking about getting into? I'm going to take a look at it versus the USDT. I'm assuming that's probably what you meant, although there is the chance that you wanted to look at it versus Bitcoin. At the minute, wait a minute, there's so many options there. Have I chosen the right one? Yeah, I mean I have, but what was going on here with this USDT? Oh, it's just all the different exchanges and then the calculate by trading view. Yeah. So ARPA, are you trading this right now yourself? If not, then are you looking to get into it? So is it sort of, are we talking about managing a position, or are we talking about whether or not you want to get into position, or indeed you bought 2 weeks ago, or indeed I was about to say, is this another one of your ICO gems? In which case, you know, if it was an ICO one, then I would hope that you'd got in at a better than Binance time, and I'd have to look, if it was an ICO one, I would look at it on Huobi or something like that, or hit BTC instead, so that we didn't have this staring us in the face and saying, oh my god, we're below this point here on the Binance listing. So 2 weeks ago, going back in time, we want to go back. Let me just see. We gotta go back. Back where? Back to the island. We want to go back 14 bars. So that's just here because I'm a bit blind and I did that in the most retarded way. So yeah, well, we're certainly up on where you got in at it, right? So that's good. My god, how retarded. Let's just do that again, but like less dumb on it. You've been in it since here, so you got in it at around about 22 cents. We're at 26. Lovely. So even though those numbers are fairly small themselves, obviously you are sitting pretty in a nice profit. I'm not trying to air your laundry sort of thing, but you're obviously 20% up towards the top side. A bit of a pullback at the minute, obviously not ideal for you, but like whatever. Let's take a look at this then from this perspective right now, and you know, just to contrast this towards like EWT, for instance, that's been in a downtrend its entire life. Certainly not the case here over on Binance. This high that came in, which was our, you know, currently stands as our all-time high. Now again, of course, as well on hit BTC or whatever, it could have crazy price action in the past or whatever. But in terms of Binance, let's just for argument's sake call this the all-time high here. It was divergent right at that point. So we did have this here. Obviously, there's one high, there's your subsequent high, and then of course you've got these 2 points on the RSI to line up with that. So we can see that we had that bearish divergence on the go, and what that has led to then subsequently is a retracement in price. So let's just put that move into context in terms of, you know, how far it got all the way down past the 786. You know, it really did lose a lot of its momentum there during that phase down the way, and then managed to kind of pull itself out of a rut here towards the end of it. Did it come in and do it with divergence at the end? It didn't actually do it. It just managed to just really benefited, I guess, from the sort of November, December overall hype in the market zone for us. And then of course, then this gives us this area to kind of draw, compare and contrast to. And what we're seeing is that puts your move from 2 weeks ago into a good deal of context as well for us with regards to the price. Just a reminder to folk, this is 2 weeks, 1, 2, 3, blah, 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 12, 14 over here. So you got into it just as we were cracking above the 236. Now obviously then the prices sunk back down the way you rode it out, all the way down here. And in terms of stop losses and whatever else, you know, most people who were using a stop loss would have obviously have stopped out there 40% off on the price. That's a bit stingy. I wonder if you kind of DCA'd throughout that you know, dollar cost average throughout that or not, or what you were kind of thinking at that point. I can tell you then, I suppose, when you were looking at the prices, you probably looked at this area and saw us coming down here and thinking, shit, you know, closing down below 20, closing down below 19, whatever, you know, 0. I'm calling this 20 and I'm calling it 19 and stuff like that. Obviously, I think you probably follow along. I mean, 0.019 closing below that, obviously a big problem. And what we see, but then opens and closes below it being the big problem. And you lived through it, and then we made it back up above that zone, and that's okay. Came back down. We did actually close here below it, and then subsequently open above it, but we didn't ever do the full shebang, and then we're back up above it again. And this area was, of course, going to be that was obviously significant. That remains the case, and looking at this thing, if we had just kept oscillating around about this zone, if we'd found this as support and moved up and not taken out that high, then you would have had some sort of pattern on the go here of some sort. Or in fact, as well, you could have been looking at this and saying that there was like an Adam here, and then an Eve, and then an Eve. You don't get them that often, but like it's the Adam, Eve, sort of type idea from the whole. This is talking about it in terms of double bottoms. This is in terms of in terms of double tops or whatever. It doesn't really matter how many or whatever that you're looking at, but essentially, because all it boils down to with any peak pattern, and this is obviously a trough pattern, but it's the same mentality, is that breaking this line is obviously incredibly significant, and you can take measured moves off of it. It doesn't matter that it's not an Adam or an Eve or a head or a shoulders or whatever. It all really always adds up to the same thing, and at that point you're thinking, shit, we could be going back down here all the way down to 12, and it didn't happen, right? It didn't happen, and that is good overall. But I tell you what, you did take on a good degree of risk when you were trading this in that zone. Okay, you did take on a good degree, a fairly significant degree of risk. Subsequently, what's happened is we've come back above the 236 and moved up towards the 382, and then pulled back away from that again. And at this point here, then it's obvious, not obvious, but it's is at this point here where you kind of when you look towards these zones and you say that ultimately, where do we not want to see the prices go beyond, and what can we cope with? And it's no real surprise to see that this significant area in terms of the neckline and all the rest of it lines up with what would now exist as a 618 Fibonacci retracement point if we were to go down in terms of our recent low on the 30th of October up to our recent high today, as it happens, down the way. So that's where you can kind of start again. You get your jitters, and again at that point, obviously. Now, if we did move on further down from there, that would be kind of sucky. What we have, of course, here is an upward move, and let's just check in with this and say that indeed it is actually in this zone just here, and then this zone just here, bearishly divergent as we're coming up towards these highs. If we look at this overall section, I was going to draw a circle around it, but it's the obvious section here of the upward trend since the ultimate all-time lows really in here, not all-time lows, recent local significant lows in there, down there at the 12 area. So that kind of puts things into context in terms of being able to cope with things so long as we don't move past that, we don't really move past this orange line again. Currently, what we're looking at is, of course, in terms of where things mostly retrace from 70% of the time, etc., is this 236. So we really do want to see the prices take out 27.51 again towards the top side, and live above it. If we see things kind of opening and closing here, and then opening and then closing above it again, then that's just the same sort of chat as what we had in this sort of section as well. And we could just say that this was a healthy retrace back down towards the 236, giving you a chance to kind of cope with the fact that if we hadn't achieved, that we were looking at the potential for bearish divergence here on the RSI, which we didn't. We were still a fair distance away from covering off, so we would have had to have gone up more. And in terms of the numbers that we're talking about here, we would have had to have gone up another sort of 20% odd. Actually, no, wait. Looking at the price action alone, you can see between this high and the next high that indeed in and of itself was in this wick area a 20% move, 15% move. You've been looking at a sort of 20-30% move just to get to not have divergence, right? So that kind of leads you towards thinking, well, hey, we're doing well structurally. Structurally, we're doing well. We've put in what could potentially be a bottom. We've come in here and put in a higher low afterwards. We've got a high here, a higher low, and then we've got a higher high somewhere in this area so far, and we're doing well. We also have this volume. Now, this volume as it stands right there isn't the best because we don't want it to be stopping volume as we talked about in yesterday's episode, but scrolling back out the way, we can see that in the big scheme of things, it isn't really, massive, like, in terms of the history of this coin, this volume here isn't necessarily like this type of crazy volume here, or this type of crazy volume here, which did represent, not immediately, but obviously a massive turnaround zone, and then again not immediately, but obviously a massive turnaround zone for us in terms of the prices. So we don't have that now, and what we do have is actually the volume increasing. Old habits die hard there. Increasing towards the top side in this period, so that looks good, and everything overall fairly healthy, albeit we have had a turnaround today, which is a minus 6.5% from where we are, and of course, from our highs of the day down to current prices of 15%, and that's obviously a lot to, that's outside of the kind of the tolerances that I personally, when I'm proactively trading something, tolerate, right? Whatever, right? Overall though, what we also have is that we're above this significant area, and we can put some horizontal lines on here, just to do this in a way that isn't massively influenced by where the current prices are, even though obviously the red line there is showing us where they are. But I'm just trying to kind of make the point. We can look at this overall structure and find a couple of significant areas. Right, so I'll hide that off there, just so we can kind of, pretend like we don't know that this has already had a bit of a pullback sort of idea, and say, well, we had a little inflection here, then one here, then here, then here, and then in this area. It's probably fair to say that this is a significant area in terms of support and resistance, and pop a horizontal line on there. We also know then, of course, when we look up the way, that we had this inflection here, here, and here, and there's probably, in terms of like decent chunky moves, this is the next one that we're looking at. Then in terms of if we drop down the way, there's a significant slope down here, a big chunk here of movement, a big chunk here, and really we need to look down towards these targets, and we already know that. I mean, this is essentially the same chat again and again and again, really, isn't it? But at least I'm hopefully building up a bit more detail along the way, and then we can compare that to where we've been recently, and we can see that ultimately, we've moved beyond that target just there and come back down, and it's not clear yet as to whether or not that constitutes a retest of a significant area which we needed to push above, or indeed failure at this point. Structurally wise, it's not failure, and we're moving towards the top side and everything's looking good. In terms of various oscillators and whatnot, it's not there yet, and there's a reason for that, really, and you can see it here on this DMI, where we don't have a strength of trend yet, and what we need to see happen is, regardless of pullbacks in the price action, is to structurally not take out all those previous lows, so that we can move towards the top side, and then of course this thing can go from being being red to being orange to being blue, just in the same way as that it curved down the way. If we on the way down, well, I'm pointing something out fairly obvious there, but I'm just saying, then we can see this expanding out the way. Now, you don't really draw patterns and stuff on this thing, but we can see the general expansion that we've had so far, but it's been insufficient with regards to the strength of trend to really change anything, and that makes perfect sense given that we've kind of floated in and around about these areas and then retested them so suddenly thereafter, rather than getting continuation. So what does it boil down to? And right now, what it boils down to is that we're looking for continuation one way or the other. If we get continuation towards the downside, and we'll just cover this one first since it's the sort of the easiest one to look at, then of course what you're looking at first off is this 24, where the 382 is really, in the next Fibonacci area. Then you've got Dow's area in here at the 22.35, and where we had that horizontal line kind of more or less in that area. And then of course you've got the next area down below, and that of course lines up with where that 618 is that we already discussed, and this horizontal orange line, which was previously a neckline for us. Now that's all gravy and that's all good, but what are we looking at in terms of if we can actually sustain movements towards the top side in terms of our next target? So we can revisit this again, and these things you almost always find a confluence with regards to these sorts of things, and 3000 trin. I'll do it in a second, by the way. Please, in BitTC right now, your kindness has gravity. Cool. Nice one. Check that out in a minute or two for you, 3000. Thanks so much for that. Then the next target towards looking to, having come up here and hit this 382, is the 618. And just to bear in mind the context of things then, if we do move down the way, down the way from having tested the 382 here, then you don't want to see it going down below this area. You don't really want, obviously you don't want to in and around about the 23 area, obviously, where we had that 236, but regardless of that, that's not the point that we're looking at. That's not what this is for. Instead, this is for looking at this target and saying that your target here that we've become quite greedy to look to thereafter is at 42. Now that's a little bit sickening for me to even say that, because in terms of profit from where the prices are right now up towards that area, you're talking about 56%, and that's obviously insane. But I mean, John, mate, you have experienced insane profits in the past, so you perhaps are kind of, that's kind of your norm, so fair enough, right? But I would be saying that 35 or 36 cents would be an area where you could be perfectly reasonably happy to take profit at, should we go back up there and visit again in the next wee while. Actually, currently, even as speaking here, we're back there above 27, and I suppose this brings us in at decent enough time to wrap up this section here, looking at that we've made it up above that 27 target, 27.50, bang. That's what we were talking about. That's what we wanted to see happen, and it's good to see having that happened right now. So that's cool. I will take a look at it. I will take a look at it. It's cool. It's getting late and all the rest of it, but I mean, it's cool. Don't worry about it. So this is it. So that's what we want to see happening. Now there are a few other things I would like to point out for you, because of course these are the sorts of things that we talk about on a regular basis. There's the volume, by the way. It's going up, curving towards the top side. The moving average curving towards the top side. Lovely jubbly. But let's put all of this into context and say, how have we handled this movement towards the top side? And would it be a surprise to see that we pushed outside and then had to retrace into the Bollinger Bands? I'm not making any predictions off the back of this. If we're still within them, that's all cool. Oh, what's that? K-Doc, don't want anything. May your KFC have gravy. Hey, cool. Yeah, sorry. So, yeah, the Bollinger Bands. Yeah, look at that. Now, I didn't predict that, so to speak. I was just saying, wouldn't you choose the language you want to have? That there, we did it together live, right? We've come back down, retest this zone. That's cool. So long as we're able to stay within this area, we don't really need to fret too much about anything. But if we stay above 22, then generally speaking, that's going to be, or 0.022, that's going to be us kind of living the good life, right? Of course, if we go down towards these areas, it's possible, but you start living the vida loca as soon as you're going anywhere beyond structurally looking at things. So regardless of what the Bollinger Bands are saying and whatever else, structurally, we don't want to be taking out, really our previous, the 20 area, right? And there's other things that you could look to as well. And I am 3,000 trend. I hope you can hang in there. I am moving on to that in just a second, but I just wanted to do a really comprehensive job here to our number one donator of all time, and he has only ever asked for one coin. And I mean, come on, give the guy a break. What we see here is there was a death cross happened, right? And then of course the death cross happened, but subsequent to the death cross over there, which happened on the 3rd of November, what have we seen happen? This is a daily time frame. So by the way, the death cross is of course just one thing. There only is one death cross out there. The death cross is the 50 SMA crossing the 200 SMA on the daily. All other death crosses are not the death cross, right? Anyway, so just as a reminder, generic reminder to folk here watching the episode, I do like to get these things to be like, language to be correct on it. But what we're saying here is that we had a death cross, and subsequently the prices only moved towards the top side. Really, we did have this low come in here, but it doesn't represent a lower low or anything. This is actually just our higher low overall, and it's part of this overall upward trend, which is then followed out with another higher high thereafter. And you can see that they're rapidly going towards the top side as well, and they could be coming in for a cross. However, this isn't all just rainbows and unicorns and everything else. What we could see happen is that this comes in and crosses over here, and then we get a retest of these things, and then we have those targets coming back in again, like 22, etc., and whatever else. And this would then represent a solid retest of a golden cross, giving you movements towards the top side. Does that have to happen? No, it doesn't. It doesn't have to happen. It just frequently does, and we'd hopefully get a nice cross here by virtue of the fact that maybe we get a continuation of this trend, and the golden cross happens. The golden cross, the opposite of the death cross there, the golden cross, where we 50 crosses the 200 towards the top side, then the 50 could be tested, and that would be enough for us. We have tested both of these and lived within it as the sandwich zone, which brings me over to my final point then thereafter, Well, actually, no, that's enough for now, because we did already talk about this target here. If you wanted to go crazy on it, right, and look for where you could go long term, let's put things into the context of the overall bull market stuff that we've seen. And it is possible to see this thing going all the way as high as these targets, such as 17, 18 cents, 21 cents, that sort of thing. If we were to go crazy on it, it would be mental to look for that in terms of predicting the future. Instead, if you were to be completely crazy and want to have a massive target, 8.7 cents would be it, and that would be, I mean, that's you tell anybody in the sane world that that's what you're looking for, then you are getting chucked into the loony bin pretty quick. Right, sound. So what we wanted to have here was, and I hope that wasn't too much, or and as well, if there was any other thing that you specifically wanted to look at, we could do it in the next episode now, I guess. KSM BTC, please. Let's do that. And this will be the last the last one of this evening. If you want, if anybody else who donates is going into the gravy fund at this stage, because it's late now. Right. Actually, just want to put this in context, and what we can do here for this one, if I just hide off this menu here, is I can just take up the two charts. How do I want to lay this out? Maybe like that one there. And yeah, US dollar, Japanese yen? No. Let's just do this. I know you asked for it versus BTC, but let's just have a quick look at it versus USDT as well. The two different charts here, just so people can see. The purple and pink one is the sort of the other chart, and and this on the 15-minute time frame. We don't want that. On the 24-hour time frame, just put things into context. I don't need the session start and ends there. Put things into context for us, just so we can have it here and be aware of it. Now, there's just two things on this. You've got the RSI down below and the chart itself with Bollinger Bands on there, just living off to the side, not taking up hopefully too much of the screen real estate as we put in the context of what we see here. Now, of course, you've got a downward trend for its entire existence here versus Bitcoin, and you've got a near enough upward trend for its entire existence versus the dollar coin. But what you're seeing right here and versus the dollars is we come up towards the top end of the Bollinger Band. Now, we haven't managed to so far confirm anything one way or the other, as represented by this doji candle here. I'm aware that I'm talking about the dollar prices, and I'm going to collapse this and talk about the Bitcoin ones exclusively in just a minute. But what we're looking at here is this doji, and we're seeing as well that it's coming in, and the general impression here between this double top here is that it is a bit divergent on it. But it would be wise to point out the fact that while there's this divergence between these areas, that if you zoom on in a wee bit and take it from these two areas just here, that actually let me just clarify what I'm saying here. Yeah, it's not decided yet what it's going to be. Like, we've got that doji candle right there, okay? And then we could push on past this and everything else and go towards the top side. Interestingly enough, by the way, if you're curious, the top line of my Bollinger Band and this one's a bit thicker, because this is for when I'm looking at things in an upper market, and I just want the Bollinger Band to be there and to know where it is, but really I'm giving a shit about the top end of it. And so we haven't decided yet, and what you could see as well is a W style pattern here. Now, a W is like an easy way of saying that you've got an Adam and Eve or Head and Shoulders. Well, it doesn't really, an inverse Adam and Eve or inverse Head and Shoulders. Well, you've had this run up towards the top side, which textbook contradicts it. So it's not, it's more likely, statistically speaking, to see a retracement here at this stage with the way that it stands currently. However, is also in very strong chance if we move at all beyond this zone, that we could see things go as high as going up towards the 78.7 area, and that might be your next target towards the top side. Generally speaking, though, we might see that retrace a little bit, and that's enough for that one. So it gives us a context to know at least what we're talking about before we look at it versus the other one, just Bitcoin in and of itself, right? So there we have Bitcoin for us, and what we see back here was that volatility. We then moved up the way. That's the 24-hour time frame. Coolly schmilly on the way down here. What do we have? Do we have bullish divergence? I'd want to see bullish divergence on this, since it's easier in a sense to get it when you've got when you've got the algos mostly, you know, doing the majority of the trading. Is the majority of the participants at any given time are going to be arbitrage bots on this one, you know, but that's just cool. That's cool. We did see that between this point here and this point here that there was, of course, bullish divergence, as you can see on the RSI, and those 2 points just there. So we had that then, and what it led to was that move towards the top side. Now we've not had this here. If we see another bottom coming in, I would like to see it coming in with bullish divergence, but ultimately I'd actually prefer to see this thing not have another lower low on the go here, because that, you know, don't want to have this general malaise continue. Let me just put in the same sort of technicals structures stuff as we were talking about with regards to everything else so far in today's show, really. And look here and say that you start to get kind of positive about this thing when we really do significantly take out the 236. For context, with the previous move up the way with the lows here, you can see that we did it. We popped up the way, came down, broke it, came back up, retested it, and actually had a wick go up above and below before subsequently coming down for our lower lows again. So let's bear that in mind as well, with that 0.002747 target as being, you know, a profit taking target as much as anything else. In terms of the structure and everything else, we have to bear that in mind. There's got a couple of features about this which are, you know, distinct. For instance, this is one high, this is another high. If this technically, if this were to fail to take out these zones, you're also looking structurally at whether or not you're taking out these ones as well. If you can take them out, then all to the good. If you don't, then in this section you've got a downward trend, regardless, you know, of and obviously that's just a small snapshot of the overall trend. So a lot of this is going to be dictated by the Bitcoin parent. We know that there's a degree potentially of weakness potentially if the things were to kind of snap on the dollar parent, but there's also the possibility for things to go fairly well on this one. We can see that there isn't enough price history in the 24-hour time frame on this particular chart to have a death cross or anything like that for us, because there just isn't a 200 simple period moving average. In fact, how long will it be before we see a 200 simple period moving average turn up? Well, quite a while, another 81 days. So we're not going to get one of them in a hurry. It'll be well into next year before you get that. And instead, we can just look towards these other things. Maybe I want to have one long-term moving average on here, because there should really be something kind of floating around below the price action in what we're looking at. I'm going to put on the 100 and see what that looks like. I mean, obviously, sorry, not below, above because it's a downward trend, they're all going to be above it. Sorry, I misspoke, but just out with a gap essentially between it. What do I want to have here? 144. 144, we don't have enough of that. Yeah, we can have 100 or whatever. It's almost pointless. It's all bunched in there, and that gives you something to say. I mean, that gives me something to talk about with regards to this thing, because we know that the moving averages are all just above our heads, and that gives us those clear areas. If we take out the 236, clearly we've taken out all of these moving averages as well. They're spanned out in a negative format. You know, we're currently sandwiched between the 8 period exponential and the 18 period exponential, giving you your sort of daily range targets at the minute of being 21.35 and 22.59. If you hear the audio quality going a bit funny, it's not the audio, is actually my voice. I've definitely talked myself hoarse here. 2 hours and 19 minutes. I forgot to shout out the targets to AB Lopez, even if you might not even be here, and you might have fallen asleep by this point yourself as well. But so yeah, if you've been keeping track of that, AB Lopez, really do appreciate it. But anyway, we're sandwiched here. We obviously want to take out this, and we can see in terms of structure, you know, it's really important as well to be taking out your previous highs, your other candle, because what we have right now is a bearish engulfing candle. Ideally, we see this retrace back up the way and finish above 21, but we only got 20 minutes left on the day, so that isn't looking like, you know, like a definite going to happen right now. In terms of the hourly time frame, we've also got that divergence, whatever else, you know, it's not looking fantastic, but it's doing okay. We should maybe just acknowledge the distance between our high that we got, you know, when we were challenging the 236 at the time when it was positioned there, and it now no longer is, down to where we are just now, just to put things into context of how we're doing, and say that despite the fact that we've had a bearishly engulfing day and everything else, that so long as we stay above 20, I think we mentioned 20 earlier on, so long as we stay above 20, then we're doing all right. You know, we're doing all right, and we've taken out the 236. We've only gone up a high as the 382 and tested it, there was, the 80% chance that we would at the point that we moved past this point before. We've gone up, and now we want to see if we're going to operate as, resistance flip support idea in this area, and that would be decent. Your targets towards the top side then come in at 25, and then thereafter the 618 lines up perfectly with where the 236 is before. So if you take it, there's a distinct chance that the 618 would be the 618 golden pocket is where you see things reverse from. So that's like a classic reversal point. And then the 236, we know that there's that 70% chance that it won't actually succeed to taking out the 236. So in both instances, then 27 becomes a distinct profit taking target for you if you're looking for one towards the top side. And to be honest, 25 really is what you're looking at before you get there if you're looking for two of them. And obviously that's ignoring 23.39 where we find the 382 currently. Did I already talk about this aspect? I know I did in terms of the dollar pairing. Yeah, so in terms of when we moved down the way here, we pushed outside the Bollinger Bands, came back up. The median line of the Bollinger Band lines up perfectly with that 382. So, 23.39, it is a profit taking target for you, of course, as we're talking about. But in terms of like what we want to see happening beyond any of these zones, 20 towards the downside is more important in a sense than 23 towards the top side. We want to see this remain as support. If it doesn't happen, then 382 and 20 and the 236 become moot at that point. And 20 to 0.0287 and 0.002339 are both kind of moot at that point, and you'll be looking then instead towards two other targets, namely 0.0016 and then 0.0025 towards that top side with an eye on that 27-28 target for that golden pocket retrace. And that still leaves plenty of room to grow. If we did go up towards the top side, and of course we'd expect this to trace down the way the Bollinger Band top end and line up perfectly with the 618 and of course the 236 and give us 3 doses of confluence in there. And then if I bring the EMAs back on, then we could get like another degree of confluence for us as well, no doubt, in that zone just here. Sorry, no, there is a doubt about it because, like I say, that would probably be where the 200 was if there was a 200. There isn't one. Let's go down to the 4-hour time frame and see what we've got there instead. The 200 shows up is at the 25 area. We had that death cross there. This is 25, right? 25 would be foolish to not take something at that point. Probably. I'm not a financial advisor. None of this is financial advice. Okay, cool. By the way, to everybody, Gank L, that's some name, buddy. Good to have you here. Really, that's cool. I'd love to stay, Rocky. Bedtime for me. Thanks again, Rocky. You're welcome. It's midnight after all. It's bedtime for myself. I really got to tune out. Right, troops, I'm off. You all have a good one. It says K-Doc earlier on. Huge big ups to RT and John again. Yeah, absolutely. Big ups to you guys. AB Lopez, see you later, he says to everybody, because he is a very nice guy and, of course, part of the community, and we all love each other here, and it's great. Bigger on the first, always a butcher steak pie dinner on the first. That's a Scottish thing for people who are interested. In Scotland, what we like to do is have a steak pie at New Year's. Of course, we call it Hogmanay. And I hope everybody out there is looking forward to their steak pie. I know I am. I'll be having a nice one. And let's just look on up the way and see if there's any chat that I really should check out, because just to see what the chat is there. What we're seeing is KFC gang from Ethan. Michael licking me fingers. Yeah, totally. I wish you could have got in on KSM early, up over 5,000% in this year. Wow. Dollar parent, dollar whatever. But anyway, K King, he recognizes the name. I'm like, what is this? I'll look it up. What is this? Never heard of it. Kevin King, of course, already been there, done that, got the t-shirt. he knows about the coins that you're only finding out about, but he is quite forgetful, says Demo. Well, I learned it from Rocky, but he is quite forgetful. Yeah, you're talking about me. 70 and 280. Does the 50 and 200 apply to the 24/7 365 traded assets? 70, 280. Yeah. That's right. We did talk about this quite a bit, and yeah, you're okay. They do relate to it, mostly because people are unsophisticated traders in crypto and they directly translate these things across. However, your really good idea is to take a look at the 70 and the 280. It's been quite a while since I've done that. I probably should on a show, but there's an easy analog for us, really, generally speaking, when it comes to the Bitcoin price action, which of course we mostly look at on the show here, and I should really go back over there. You have the 50, the 200, and this specifically pertains to the daily time frame, obviously. We have the 50 and the 200 on this one, and it lines up more or less when you do the thing. As you say, you learned it from me, blah, blah, blah. So yeah, so like, and that would be where they would show up. The 50 simple coming in right now at where that white line is, which I'm clearly using as for reasons here, at 18 grand if we were to go down and visit it, blah, 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 blah. Interesting gap here in the way that the Bollinger Bands worked, isn't it? But there you go. Yeah, so you're completely right about that one, Demos, and it's totally interesting stuff. I'm kind of only just getting a glimpse of that conversation, so I don't know if I'm out of context here or whatever. Thank you so much, by the way, TraceBond, for hitting like. I hope everybody else hits like. It would be quality if you did. You won't miss out on altcoin pumps if you buy all of them. Logic, nice one, Zoner. Big brain stuff there, definitely. Nice. Really. There's some insight for you. There's a bit of, and if you long and short them all, Zoner. Oh, K King, the perfect hedge. Yep, absolutely. Look at that, genius trading lessons for everybody here tuning in. If you're first time tuning in, then read back through the chat there, because Zoner and Kevin just explained how to trade perfectly. Nice one. Gang, I used to live in Scotland. Unfortunately, moved there the Friday before. Oh, you moved there the Friday before. That's cool. You used to live in Scotland. Where did you live in Scotland, and where did you move to then afterwards? Oh, the banking crisis. You moved there the Friday before the banking crisis. There you go. Just back whenever I was experiencing, I don't know, I was working in the bank when the banking crisis happened. Interesting times. Cool. So nice one. Nice to see everybody chatting. Thick carved ham, 2 times egg and chips, Christmas Day. Good one. Good idea. See you, John. Runny egg and chips. Nom nom nom, says TradeSpot. Green eggs and ham. Michael John Scott. Now, green eggs are something I've never really actually had. Gonna have to get some. Right, New Year's breakfast for Kevin King. Okay, cool. I think it's wrap up time now for us. I'm going to do the reverse roll call. By the way, Gank, hit that subscribe button. Megalossa, hello Rocky. Do you think BTC is going to correct around 28,500 in the next 4 hours before going to next upper support? By correct, what do you mean? I mean, it's an interesting concept, and I would say that that's fairly decent idea, and there's the potential for that. Get my thing lined up properly. Do I think that it's necessarily going to? I mean, if this plays out in terms of this pattern, then yes, and the correction target comes down to sort of the 28,000, giving you that $800 discount on it. That's fairly likely. Of course, you know, if we push on beyond, then we push on beyond. One of the reasons why it's likely is because we've got bearish divergence, 1, 2, 3 of it here along the way towards the top. So, you know, it all lines up nicely. But if we don't, that would burn off fairly rapidly, and I'd you know, adapt and survive looking towards 30,000 instead of, you know, the other stuff that we were talking about there. If tomorrow morning comes around $29,200, then on New Year's Eve we'll be around about 30k, says Bobo Rossi. Good to have you here, Bobo Rossi, by the way. If you want to hit that like and subscribe button and all the rest of it as well, massively appreciated to every single last one of you. And then we will be taking a wee quick reverse roll call. So thank you so much to everybody for tuning in today. Really do appreciate it. And number one shout outs have got to go to John and Artie, who really blew my socks off earlier on. You know, maybe I'm a little bit tired and should have slept a bit more and all the rest of it, but you know, it was definitely a happy time for me seeing that. I massively appreciate it. Okay, so looking back up the way, I want to say massive thank you to TradeSpot as ever. He is the ever-present moderator here with us. He has his own YouTube channel. I highly recommend everybody takes a look at it. He's very educational and all that good stuff. And yes, and of course as well, I love him very much because he is my brother, everybody. So that's who TradeSpot is, and we did indeed work at the bank together during those very interesting times. Looking back up the way as well, whoever else is chatting, we've got Zoner, never under 30k again. We've got Michael John Scott. Bobo, my guess has been BDC, or talking away to each other. Read it amongst yourself. I'm going to do the reverse roll call for everybody. And we have Zoner, K King, and Michael John Scott. Very good. The two of yous, RT and John there, are the ones that are topping up that leaderboard. on the donations list. Then scrolling back up the way, we had Bobo Rossi, and I don't think I've known you or seen you before, but it's good to have you here. And if you're Italiano, then let me know. You've got an Italian name there, and that's nice. We had 3000 Trin, another person who donated to the channel today, and of course a legend in his own right anyhow. We have Mago Loza. I also wonder where you're from with that sort of Italian sounding name, so that's cool. But let me know and subscribe to the channel and all the rest of it. It's cool to have you here. Scrolling on up the way, we also had Gank L. It's nice to see these unfamiliar names to me. If you are familiar on the channel and I should know your name, then I apologize. And of course, I look forward to seeing you in the comments, and you're absolutely more than welcome to leave comments below this video. We can continue to discuss things until I come back again tomorrow, because I do weekly technical analysis, and I will be back again tomorrow for more of the same. Looking on up the way, there are plenty of other people who need a shout out. You got Demo, who is a great guy. He is my biggest Patreon supporter, by the way, for everybody who's interested in knowing, and a legend again in his own right, a very good contributor to the community, and a lovely guy, an Irish guy, and all that good stuff. And then we also have Johnny Smith, who is in bed now and is cheeky, but we all had a laugh at his expense earlier on, and then kind of, you know, kicked it back his direction. It was all good fun. And then going up the way, K King, you might have got a shout out for me in the reverse roll call already, but I don't mind giving you two. You're another fantastic moderator and a great guy. Navin Ethan, one of the most loveliest chaps from Canada you'll ever meet, and of course Canadians are friendly, so that's saying something. Looking on up the way, we also have in the show here this evening K-Doc, who loves a bit of KFC, and of course as well Celtic Football Club. Hail, hail, good pal, good guy, good lovely guy, and our lovely a lovely Scotsman. And then scrolling on up, who else did we have here? I think I said hi to Zoner already again, but then Lee Chinnick, looking forward to seeing what he has to say about getting drunk when I scroll back through these comments on Saturday morning for him, and Friday night for me and us on the Friday evening stream, because he is of course in Australia, mate. Scrolling on up the way as well, who else did we have joining us for this evening? I think I have got a big chunk of the people who were here. Of course, let's not overlook AB Lopez, an absolute legend who more than earned himself that spanner with his fantastic chat over the last couple of days, keeping everybody informed about the timestamps, about when we've been talking about things. And of course he had his own YouTube channel, very well deserved. You should go check it out. He's an interesting guy. I liked and subscribed already, and check out his YouTube channel. In fact, you should always check out everybody else's channel here if you're a part of the community, and let me know. Maybe we'll make a page in the Discord so people can promote their own channels, because why not? And I'd love to see them all if you have them as well. Demo has some stuff on YouTube too, by the way, as it happens, but it's not his gig, so to speak. Looking back up the way, who else was there that hasn't had their reverse roll call shout out quite yet? I'm not seeing anybody. I did say Artie Pyle, I think I did, but if I didn't, I'll say it again, because he is of course the second biggest contributor for today and a fantastic dude. And I think that covers us off in terms of the latest 200 comments on the chat. And Gank moved to Canada. I'm moving offline. Thank you so much for joining me. I really do appreciate it. Patreon.com/RockyOutcrop. There's membership options, all sorts of stuff, donation buttons down below. None of that is necessary. All the value is massively appreciated. I'll see you in the Discord if you're looking to join that. Of course, I could do a better job of being more active in there, but you can always hook me up as well with private messages, and you can find me on Twitter with Rocky_Outcrop over there on the Twitter sphere. Thank you so much for joining me. I'm literally about to hit the button to say cheerio. I want to wish you all a fantastic and wonderful night or morning, indeed, wherever you are in the world. Stay safe out there, trade healthy, trade safely, don't breathe on or near anybody, and we'll be back again